Good afternoon, everybody. Welcome to the market close for, what is it? It's October 27th. Holy banana market close. I can't believe I said that. Hello, everybody. Welcome to this week. What a week it's been. I still can't believe I called it the market close, but technically the market is closed, so that is absolutely funny. All right, everybody. It is good to be here. This is our last weekend of October. So that means next Sunday is our free memberships. So we got about 10 of those to give away next Sunday. So that's going to be kind of cool. All right. Whew. We got a lot of great news for you today. I have gotten all of the technical difficulties worked out. I finally got everything working all perfect on this new Ecamm Live, because we used to use StreamYard to do these. We're now using Ecamm Live. They're all working nice and fantastic. So looking forward to that. And of course, today's picture, we've of course got the bull and the bear out doing their trick-or-treating, since this is the last this week before the big day. We do still have a market close on Wednesday, the day before Halloween. So that's going to be fun. That'll be fun. I think that'll be a great show. I can't wait. All right. Let's quickly say hello to the chat, see who we got in the house. We got Jonathan. I'm never late for House Hippos. Oh, yes. We do have a story on the House Hippo that is coming up in the news segment. So you got that to look forward to if you're a big fan of the House Hippo. Bismarcky says, happy Sunday, everyone. Happy Sunday to you as well, Bismarcky. Oh, we got King a Day. Hello, here before starting. Yeah, nothing wrong with that. We got Mary in the house saying hi, everyone. So, of course, you guys know. I didn't ask you guys to hit the like button as much as I should have in that last stream because we didn't have Mary here. But now that Mary's here, there's no excuse, guys. Hit that like button. Let's get it up into... let's take it up into orbit. Let's put the like button into orbit. That's our goal today. Niece says, hey. Hello, Niece. Always good to see you. Stan is in the house. Hello, Stan. We got John Doe in here with a hi all and a hi Candace. Market close. Yeah, I know. I know. King of Day says, you made me check the date again when you said market close. Yeah. You and me both. Prairie says, good afternoon, Candace, and happy Sunday, everyone. And we've got Amanda in the house with a big all hi all. Here's the beautiful thing as well, guys. Now that we've got this new system, it is relatively easy for me to switch to screen share mode and back. So I can easily go. I think it's number 9. Here we go. Bang, bang, bang. See, look at this. Nice and fast. I can get back and forth. So we can pull up screens. If we needed to look at something, we can do that now when we're still in the news segment, because I didn't like that we couldn't do that before. So I'm definitely looking forward to that. All right. Let me just pull this here over. You know what? Let's jump into the news. Let's get the first story out of the way right away. Obviously, it's all about the bank. So the Bank of Canada, they dropped on Wednesday a jumbo-sized 50 basis point rate cut. Gotta love it. That takes our rate down to 3.75%. This is the biggest rate cut that we've had since, March of 2022. So they had some big ones at the beginning of the pandemic as they were trying to stimulate the economy as everything was shutting down. So the goal of this larger cut, of course, is to boost economic growth and to hold inflation close to the 2% mark. As you guys know, we were at 1.6% on the last CPI. So we don't want that going down too much further than that. So this might help. It's hard to say. They're also trying to, of course, stick the landing. Everyone's been talking about we're going to have a soft landing, a hard landing. We don't want a recession. This is part of the try to prevent a recession from happening because, yeah, we definitely do not want a recession any way, shape, or form. Now, they did say that they do expect to reduce the rate further if, of course, the economy evolves with basically in line with what they're expecting. They did caution, though, of course, and they have to, because, if things, like, let's say inflation started to fly out of control again, obviously that would that would prevent another rate cut. But yeah, they cautioned that that the timing and pace of future cuts will be based on incoming data. And this is kind of exactly what we've been expecting. Some economists are actually believing that our next rate cut in December will also be a 50 basis point one as well. So I kind of hope that's true. It would be very, very good for a lot of different things if it were. So big thing, of course, is those of you who have been following the REIT market. This rate cut, this 50 is going to be fantastic for REITs. Also going to be really good on the utilities as well. And I do expect to see some movement starting to happen with the communication sector. So we got a lot of things, I think, to look forward to in lines with the rate cuts. So nothing wrong with that at all. Oh, we got Jay in the house with a hi, everyone. Perfect. Before we get to the next story, just a question here. Have any of you carved your pumpkins yet? Have any of you carved your pumpkins yet? Now, I have charged. I have carved. No, no mistake. I made it into a beaver. If you can believe it, I did make the pumpkin into a beaver. I don't know. Here's the funny thing. I just thought about it right now, so I didn't really think to bring up a picture, but I'm thinking, let me try something here. Let's go over to our screen share, and let's go we're into Discord. All right, perfect. I don't know if I did or not. I thought I posted a copy of it on, if I did, it would have been, should have been the random, I think. Let's see here. General stock talk. Nope. Looking for where's my random one? I have they keep getting changed. The names keep on changing for me. So I'm like, I don't know where it is. All right. Where's the random? Holy banana bread. I'm not seeing the random one. Holy cow. That's interesting. Nope. Oh, here it is. Bang. All right. Did I post it? I did not. All right. I think if I go to upload a photo here, and I know it's on my phone, but I think if I go to photos, it should be, yeah, here it is. Let's grab it. All right, let's upload this baby. All right, so here it is. Here is the pumpkin that I carved. I did this yesterday. So I did my best to make a beaver because, Jill was like, that's not scary. And I was like, no, but I thought if I did it as a beaver, the community might be amused. So there is my beaver pumpkin. We got that going. So you gotta love that. Gotta love that. All right. Let's get back to. Whoops! What the heck did I do there? All right. Here we go. Let's get back to this one here. All righty. All right. We do have, of course, more stories. And, this might be one of these weeks where we actually get through the stories a little bit sooner than later. All right. Let's switch on over to our next story. So we did have the Prime Minister came out this week and has announced that immigration is going to be slowing down. So basically, in a nutshell, Ottawa is planning to reduce the number of new immigrants entering Canada. So this is going to be basically they're cutting the number of people who will be granted permanent residency over the next 3 years. So the 2025 target, it's been lowered down to 395,000, which is basically, that's a 21% decrease. And by 2027, they expect the decrease to take the number all the way down to 365,000. So that's a lot of people that won't get their residency. Now, in 2023, though, and this is, I'm going to kind of come at this from two different angles. In 2023, so 97.6% of the country's population growth came from immigration. So 1.27 million people. So this is the thing. We have an issue with immigration. Absolutely. We got too many people entering the country. Absolutely. But here's the thing. How much do we want to shut that off? Because a lot of the influx of immigrants have been really helping our GDP. It has been helping the economy in that sense. So it's kind of like, I think it's more of a delicate balancing act. So I don't know, like immigration, yes, it's too high. We need to pull it back a little bit. But are they pulling it back too much? Because here's one of the things I found a little bit disturbing. So they're saying that by 2027, because of this cutback, they're going to have 670,000 less homes that they have to build. So that's, to me, I'm like, that's not the way to look at it. We should be building as many homes as we can. We should be beefing up our public services to handle a higher population. Then we can let more people in, because that would be good for the economy. But, the government is sort of looking at it like, oh, look at us, look what we're doing. They have pointed out that they can build less homes, that they can alleviate the strain on the public services. But as I said, the economy does rely on huge inflows of immigrants to help us out a little bit. And also according to a recent Scotiabank report, the immigration crackdown could actually cause Canada's labor force to start shrinking. So that may not be the best thing that we want to see at all. So, yeah, I think it's a bit of it will be a bit of a challenge. And how I think will happen is this here may be an overcorrection. And if it does turn out to be an overcorrection, they can always increase it as we sort of move through. But I just don't like the idea of saying, we don't need to build as many houses. It's like, build as many houses as we can. Let's really beef up infrastructure. And we got a story a little bit later as well about the infrastructure. And, it's not a rosy story. It's not a good story at all, to be honest. All right. Terry is in the house. Hello, Terry. Good to see you. All right. Now, the next story might be the one that you guys are waiting for. But before we get to it, let's just quickly say hello to Vic. All right, I hope you can find a safe space to park your truck. So yeah, all right. So the next story, and I'll bring up the picture first. You guys will know exactly what this story is. The House Hippos. The House Hippos are returning. So I don't know if you guys remember the House Hippo, basically from those old commercials. I think it was from a group called Concerned Childhood Childhood Advertisers? Something like that. But looks like we're going to start to see the House Hippos coming back once again. So there's a new group, a nonprofit group that's called Media Smarts. And they're planning to use the House Hippo in a program that they're looking at. So this program is basically designed kind of like the last thing, like the House Hippo thing from Concerned Children Advertisers, I guess they were called. The whole idea was to sort of, have children sort of question things they see on TV and know that some things aren't real. Well, Media Smarts is going to do the same thing. And this time they're actually looking to try to help Canadians basically to be able to spot things like deep fakes. So it is a federally funded program, and it's going to include lesson plans for teachers, educational videos, which of course is where the House Hippo is going to come in, and tip sheets for identifying AI-generated content. What's kind of funny is I'm talking about this, and the picture I'm using was an AI-generated content. Oh boy. It's like they're after me. Oh boy. Yeah, it's bad. So kids can be particularly susceptible to disinformation. So can a lot of adults, to be honest. And with many of them online, quite a bit. So kids are online a lot nowadays. They are seeing their fair share of AI-created content. So they did one analysis where they where they basically were looking at kids as young as 9, and they wanted to see how long it would take for them to find misinformation as soon as they opened a TikTok account. The answer was not even a couple of minutes. Pretty much right away, they ran into AI or misinformation. So the whole goal of this is teaching media literacy in schools is the best line of defense against fake content. So what can I say? I mean, there's no way around it. Kids are going to run into it. I mean, heck, there's a lot of people it's funny. I'll give you guys a good example. When I am looking at, I love science, so I will watch a good amount of science videos. What I will sometimes do is I'll look at the name of where this video is from. And if I don't recognize it, a lot of times I just don't even click on them anymore because there's so many AI-generated, unfactual science things that come out. Sometimes it might have a picture of, a Neil deGrasse Tyson looking like he's worried and saying that they're, and some kind of a big clickbait type title. And then it's just an AI voice just talking about stuff. And sometimes the stuff is very questionable. So, I found sources that I trust. And that's kind of one of these things. I think when it comes to the internet now, I think you almost have to have. It's almost like your own personal trust badges that you can put on different, whether it be creators, channels, news sources, because there is so much fake information running around, and I mean, and that almost ties back to the whole election and fake news and all of that. But I mean, it's much bigger than that. It's just, if you create, let's just say, for example, you create a YouTube channel and you use AI to create your content and you make it all sensationalistic. Pretty much, if you go back to the olden days and you had things like the National Enquirer, some of them have those type of standards. And as a result, holy banana bread, we're getting a lot of drivel thrown out there. So, when I saw this story, I think the House Hippos are funny. I remember them from a kid, and they're also very distinctively Canadian. I imagine any of the Americans who are here right now are thinking, House Hippo? What's a House Hippo? Why is it so small? So yeah, it's it's definitely a Canadian thing for sure. All right, Andrew says, sounds like they are trying to make numbers look good with infrastructure. I believe there's not enough infrastructure workers able to build. And that could be an issue too. There's definitely a lot of issues right now when it comes to infrastructure. And we have a big story coming up. I think it's 2 stories away maybe on infrastructure. So, we'll talk a lot more about that here in a moment for sure. Let's see. Joe Smythe says, vid day, everyone. Awesome. Video day or good day or we'll take it as both. We'll take it as both for sure. All right. This is great. We're getting the news out of the way nice and early this time around. We've got ourselves an AI story. So Amazon has an AI startup that has been backing. It's called Anthropic. So Anthropic, they have a chatbot, sort of like ChatGPT, but this one is named Claude. So Claude has released a new feature. Now it is in beta mode, but what it does is it allows the AI to completely take over your computer, like everything. Like it can go on the internet and browse. It can do the whole kit and caboodle. So the idea is that you can give control of your computer to Claude, and it will then work on all of your dull tasks. Like whether it be scheduling meetings, filling out forms, maybe even going on and booking a flight for you. So, and it's pretty cool. So you can it can basically use your computer just the same way that you can, because you're basically surrendering your computer to Claude completely. Now, this feature is what we call basically it's not an AI agent, but it is a almost an AI agent. So an AI agent, that's kind of the next step that that a lot of these chatbots are going to evolve to, and we'll talk about that here in a moment. But basically, in a nutshell, it's a program that can autonomously do tasks and make decisions without a human. So it doesn't need a human at all. You basically just tell it what to do, and it decides. It decides everything as it's going along. Obviously, if you want to book a flight and send it to do that, you want to give it all of the pertinent information. Otherwise, you could find yourself flying into Iceland when you wanted to go to I don't know, Hawaii. So that could be an interesting thing. So right now, much of big tech, they're kind of viewing agents as that next step beyond, of course, chatbots, as I was mentioning before. And with AI agents, that's when you're really going to see profits start to ramp up for the tech companies. And of course, you guys know we have this is kind of tech week in the US this week coming up for earnings. So, these are the things that if we already had the agents out, these would all be fantastic earnings. So we'll have to sort of see how that's going to look. Wednesday, when we do the market close, it's going to be interesting. It will be very interesting because we will have a lot of the tech data already in at that point. And keep in mind, NVIDIA, because, we do like NVIDIA, their earnings isn't going to happen until a little bit later in November. I think almost towards the end of November. And what happens with all of these other tech companies could very well set the stage for what's going to happen with NVIDIA. So that's definitely going to be very, very interesting. Now, one other little thing in this area as well. Next month, Microsoft Copilot, they are going to launch a tool that's going to allow users to start building agents. So, agents is right around the corner, and it's going to be very interesting. And I was mentioning this, I think I mentioned it to Jill the other day, we're going to get to a point where we won't even use our own computers. It'll all be agents doing it for us. It's more or less, we may have an interface for the agent and say, okay, here's all the tasks I need you to do for me on the internet today, and then just send it off to do things. So it's going to be very, very interesting to see how this all looks once, of course, it rolls out. So I thought that was just very, very, very interesting. So definitely very cool. All right, we have Roku Stittsville is saying good afternoon, everyone. JJ is in the house with a good chilly afternoon, chat fam. Oh boy, it is really chilly here. I think this morning we had a wind chill of -6 degrees Celsius, so it was cold. But amazingly, Wednesday we're going back up to 20. So I'm like, okay, we still got a little bit of a heat coming by. All right, Vineet is in the house, just stopping in to say hi to everyone. Got to catch the replay later on. Absolutely. Enjoy the rest of your day, Vineet. All right. And JJ saying, Copilot has been very useless still a while ago. Let's see how this new update behaves. Yeah, absolutely. And it's a thing. I've noticed with AI that it just keeps getting better. Even with ChatGPT, sometimes I will ask it things and I haven't seen any kind of update that's come out, but all of a sudden it's much better at a task it was kind of mediocre at maybe a month ago. So that's kind of, it's going to be interesting. Jonathan says, I, for one, welcome our new AI overlords. You're hedging your bet, Jonathan. You're hedging your bet. AI takes over and they're like, oh, wait a minute. This is the one that said nice things about us. So, that could be very, very interesting. All right. JJ says right now it's sitting at 2 degrees Celsius with a crap ton of frosty wind. Oh, boy. Not great, not great. Michael says, how will the strike on Iran this week affect the markets, which could be a new start to another war? It's really going to be very interesting, I think, with... here's the thing. It could have been much, much worse. So Iran They were prepared for a retaliation. They knew it was coming. Everybody knew it was coming. But the big worry is if Israel had gone after, well, a couple of things. First of all, oil. If Israel had struck after oil, there would have been a retaliation, 100%. So now we're sort of sitting back and see how Iran is going to respond to this. Now, the nice thing about this is that Israel didn't do a lot of damage. They had 3 strikes, so 3 waves, but it kind of wasn't that effective. I think it was almost more of a show of force than an actual intention to cause a lot of damage. So with that being said, now it's in Iran's court, and Iran, I think the way these attacks occurred gives Iran a way out of it. Iran at this point can sort of say, well, okay, yeah, we deserved it. Fine, it's done. We're done. The U.S. is certainly pushing for them to take that stance. So as we look at as oil, for example, I don't think we're going to see a massive pump in oil unless, of course, things do deteriorate. And let's say Iran does decide to say, oh, no, we're still going to strike back. That would be a bad idea. But I think for now, if this peace remains, and if it looks like Iran is going to sort of let this go, then we're probably going to see oil. It might drift down a little bit. It might drift down a little bit as we still do have a surplus out there. And, we're now looking at a situation where the Middle East has cooled down a little bit. So I don't think we're going to see. Now, I know that in your comment, you were mentioning, could be a new start to another war. Right now, I don't think it is. But if I'm wrong, and we do have escalation start to rise up again, then absolutely that will have an impact. So I think this week might be that opportunity for those who are very bullish on oil long term. Having that price come down a little bit might be good for your DCAing for sure. All right. JJ says Claude and Perplexity are still my favorites. All right. Now, I did mention that we have a infrastructure story. So, so on Monday, the National Statistics Agency released the results of a 2022 survey of government agencies responsible for public infrastructure. So Stats Canada, they have estimated that it would take, and get this is a lot of money, $356.7 billion to replace road or water systems that they consider to be in poor or very poor condition. Now, this survey, they did the same survey back in 2020, and it was about $100 billion less then. So the price tag is going up. So what exactly do they mean by very poor and poor? So very poor basically means that that road or those pipes, they pose a public health or safety hazard, and they do require immediate replacement of at least most or all of that asset. And poor condition means that it needs substantial work, but currently does not pose an immediate health or safety risk. There we go. So if we look at water first, we're looking at, and this is a countrywide thing, but we are looking at pipes that are getting very old. And these are not just drinking water. So we're talking drinking water, waste removal, and stormwater pipes. I don't know what I was trying to call it, pikes. Some of the symptoms of this, we're already starting to see it. So we just recently had a very big storm in Vancouver. And the pipes, basically the stormwater pipes, they became overwhelmed. And that caused a lot of flooding. I remember seeing pictures of cars floating. So that is part of that issue. Apparently, if these pipes had been in better condition, that flooding wouldn't have been as bad. We also, going to the other side of the country in Montreal, in August, we had that big water main break. Same condition, same situation. It's these pipes that are in critical situation that need to be replaced. So it's kind of interesting. But here's the thing: if we don't do anything about it, these type of events are going to become well, they're going to become the norm until we get off our until we get off our butts and fix the pipes or fix the roads. Now, more than 10% of Canada's water systems are considered to be poor or very poor, and the cost of just fixing that water, so just the water systems alone, that would be 106.5 billion. Now the roads, the roads are another story. That would be another 250.2 billion to replace road infrastructure that's considered to be in poor or very poor condition. And keep in mind, it's not just the roads. So that when we're talking about this, we're also talking about everything from roads, bridges, tunnels, public transit, sidewalks, and bike paths. Now, I know in Ontario, there's been talk about removing some of the bike paths, but yeah, it's just a mess. And any of you, I think, any of you who are drivers, the bane of potholes is probably a big part of your normal driving condition. I've seen some massive ones around Ottawa, that's for sure. And although I will admit, in Ottawa, the potholes I've seen around here are nothing compared to the ones I've seen in the Maritimes. I know in Nova Scotia, potholes were absolutely much crazier than they are here. So that's really, really interesting. So we definitely have a lot of work. We have a lot of work, I think, when it comes to infrastructure. One of the reasons that, I am bullish on infrastructure. I just hope that the government sort of gets a bit proactive with it instead of waiting for things to blow up like the water main in Montreal. Let's not wait. Let's get stuff fixed. The other big issue too is with the water pipes is, if these things are getting in bad shape, I'm always concerned about what it could be doing to that water, that drinking water that's coming into everybody's houses. So we definitely want to see that taken care of for sure. All right. Let's see here. Vaughn says, how do you position your portfolio if Trump's idea of high tariffs is going ahead? That's a fantastic question. Let's first of all, here's the thing. I don't think they're going to go ahead. I don't think he's going to win the election. But let's say he does win the election. I hope that the people around him that he surrounds himself with have at least enough sense to sort of talk him out of that idea. Because I think, I will say this, if it starts to happen, so if he starts going completely crazy on tariffs, right across the board, I would probably look at going a little more defensive. I think that I have a feeling that if he does it and he starts to see everything he was told would happen if he does it, I think he'll back down at that point. Logically he should, but sometimes Trump does defy logic. So sometimes it's hard to tell what he's going to do. But luckily, I really don't think that's going to happen. And, from what I've been hearing with a lot of the polls that are out there now, I think the election is going to be a mess. I think there's no way around it. So we have volatility now. We'll probably have some volatility after the election as well. And, if things really deteriorate, if we have another January 5th or 6th issue, whatever year date it is this year, next year, that could be interesting as well. But I do think that there will be a bit of a sigh of relief after the election is done. But one of the things I do think that we may see is a situation that, whether Trump is winning or losing, he might declare himself the victor well before all of the votes are cast. So there could be a bit of a mess at election day. But I look at it this way. Any volatility that we do see over the election, I think it's going to work its way back out. So if you're in a situation where things start dropping because of that, uh, as long as they're good fundamental stocks, I would hold on and wait. I wouldn't take losses from any of them at all. All right. Michael says, oops, let's pull this up. I was looking at AMBP, which pays a 10-cent dividend and earning beat, but Revs was down a good amount, about 30 million, which makes cans for like soda and beer. What do you think? AMBP. Huh. All right. Let's take a gander at this. All right. Whoops. Right over here. Let's see if we actually have it in here. I may have to go to another AMBP. Oh, I do have it. Metal packaging right here. Alrighty, let's take a look here. We'll go to this one here. All right, let's take a look at their year. I'm still very annoyed that this has been reduced to half a page. Yeah, it's not a big stock. It's not a big stock. 371. You said they make cans. So let's see here. Consumer metal packaging, rectangular oval-shaped steel and aluminum cans for multi. Okay. All right, fair enough. Let's take a gander at a little bit of their data here. All right. We got nothing. We got nothing. It annoys me. It annoys me to no end when there's absolutely nothing in there. But I do see they've been paying this 10-cent dividend for a while. So, let's see here. June, September. Well, this is interesting. March. So it looks, okay, yeah. So it looks like, that's interesting. Their dates are kind of odd a little bit. So at first I was like, is this like a quarterly dividend? It sort of looks like, they may have changed to quarterly recently, maybe, but I don't know about this company. I'm going to come out a little bit further. Let's go out to 5 years. Okay, so they started here when 2021. They've really been on a downhill since then. They have, to me, that's not a lot of positive there. The fact that they're near a penny stock value, I'm a little leery of them for that. I don't know what their debt is. I don't know what their debt to equity is. So I'm missing a lot of data that I would like to see. Like, I don't even know what their earnings are. Like, I do not even have that data. That makes me concerned. So I would be very hesitant with this company, to be honest. I personally wouldn't invest in it. If you are invested in it, be careful, be careful. I mean, yes, it looks like this has maybe, they may have leveled out, but I would still watch this one like a hawk. Absolutely. Let's see. Roku says, new housing is built on such small property that rainwater has no place to be absorbed, so it overwhelms the drain systems and flooding occurs. Yeah, there's some interesting. A funny story. So where my mom lived, now she just sold her house, but where she was living, they were outside of city water, so they didn't have their own city water, but there was this tiny little drain at the bottom of the hill, and the city was actually charging them a whole bunch of money for runoff going into it, saying that oh, you're responsible for all of this water from rain and stuff. And I used to think that was funny that they'll charge for that, but they were like, nah, we don't want to bring water in. And quite literally, the water stopped about not even half a mile from where she was. So it was kind of crazy. It was definitely kind of crazy. All right. Michael says, I think Trump would be better than Harris with Iran. Won't test Trump like they will with Harris. Since Biden's been president, then Iran starts more crap. See, here's the thing. It's hard to say. It's hard to say. Now, Trump, yeah. Some people will look at Trump and it's like, I don't know if I want to deal with whatever, he's going to do, because he's very unpredictable. So that does make it a little bit harder, obviously. Just grab some coffee here. But it's really hard to say how. One of the big problems with saying something like this, you might be right, but we don't really know how Harris will lead. And I know that so many people, especially on the right, have said, Harris has been the vice president and she's done nothing. Well, you don't get to do a lot as vice president. That is part of how it is. So we'll have to see how she actually handles the office, provided that she wins. So I definitely think she'll be much more bolder than Biden. Absolutely. She has worked in, just the whole, being a prosecutor and all of that stuff. I think that she'll know how to stand up to a lot of different people. And I've seen her, and I've seen just, heck, even when she went on to Fox News, the way some of the stuff that was going on there, she was trying to stand up and fighting back. So I don't think she'll be a pushover. I think she'll be much more effective than Biden. But Trump has that whole, he'll do anything, and nobody really can predict what he's going to do. And, sometimes, if you're worried that the U.S. might get involved and you have somebody like Trump leading the show, and you don't know how he's going to respond, or you don't know what he's going to do, that could be a bit of a deterrent. So you might be right about that for sure. All right. Oh man, I can't believe how quickly we're getting through the the news stuff. All right. Bismarck, he says, let me just pull this up here. If Trump wins, I'm buying a 4-year supply of popcorn. Sit back and watch the dumpster fire. Well, this is one of these things. I've said this even before he won, when he was fighting against Hillary. I was adamant that whatever happened in the election, it was going to be very interesting. Now, I was in that group that I didn't really think he had a chance. And he did win. And then I was like, okay, well, these next 4 years will be interesting. And they were. Absolutely. Mind you, those 4 years were very, it didn't really, in some way, it didn't matter who was sitting in office in those 4 years. It was going to be interesting because, once in a 100-year pandemic dropped, and, it was pretty crazy times. But yeah. And with this election here, it will absolutely, like I said, it's going to be a fun to, I don't want to put the word fun. It's going to be an interesting election for sure. It'll definitely be entertaining. And, we've only got a couple of weeks left, and, we'll have to sort of see how that all boils down at the end of it all. So, yeah, it should be fun. All right, now, just give me a second here. All right, let's see. BGS being a food company would be better than the rest at $7.50 with a dividend of 19 cents. All right, let's see here. Yeah, let's see. BGS, give me a second. I'm going to pull them up. Oh, I still have the thing up. All right, BGS. All right. Gold and silver. I like that right off the top. I am bullish on both gold and silver, commodities in general. Let's take a look here. Now, I'm not liking the look of this. Michael, you keep bringing in these very, very penny-like stocks. This one is a penny stock. It's worth 2.5 cents. All right, where are our data? Look at this. This is another one without any EPS or any of that in there as well. Let's see. All right, so they're looking for gold and precious metal in Colombia. Yeah, not too shabby there, but I have a feeling I'm going to have next to nothing in here. Price to book is in the negative. That's never good. Yeah, this is another company that I look at it this way. There's enough good, gold and silver or just commodity companies that you can invest in, like B2 Gold. Like I like them. That I would avoid a company like this. It's just. Let me take a look here. It's a food company. Oh, okay. Well, let's try this again then. BGS. I probably went to the wrong company here. All right, BGS Food. There we go. All right, BGS being I should have saw that right away. You did mention it was a food company. That's on me. That's on me. But let's take a look here. All right, let's just go out here. Now this is looking a little better. A little better. We'll go to 3 years. Now they have definitely been down, but in this case here, 19-cent dividend. That's a pretty big yield. Definitely quarterly at 9.275. I am lacking some data here though. Again, and I keep, well, actually, no, here it is. Let's see here. Their debt to equity ratio, that's high. So 276%, meaning that for every dollar in assets they have, they've got $2.76 in debt. That's a lot. That's definitely a lot. They're not currently profitable, as you can see from the return on equity, negative 14.28%. So that's definitely concerning. I really, really, really like to have, like, I know myself, and I'm a conservative investor. I like my companies to be profitable. So this one's not profitable. But I mean, I can see kind of, let's just go back here to the overview for a second. If we go back here, we'll even just go to the 6 months. I can see that since the pandemic, so it looks like they had, sorry, this is not the pandemic. This is something else. See, that drop is big enough to be the pandemic. Let's go back to 5 years. Actually, I'm not even seeing much of a drop here on the pandemic, but they haven't been working. They haven't been doing well. Now, if we look here, I'd love to know what caused this drop. Maybe that was in earnings, but it did look, and this is interesting here, Michael, is if you see down below here, the volume, when they crashed like this big time, there was a huge spike in volume in here. But, something happened. I don't know what it was. They have been kind of moving sideways. I would be very, very careful. Like, I won't touch this one. I tend to avoid stocks that, are not making a profit. So definitely be a little bit careful with this one. All right, now I got to skip back here to Skiz. So you don't know what Trump will do. He's already been president, so we kind of do. Well, what we do know is that, he'll take a hard stance, but he's got a little bit, there's always been that unpredictable, there's always been that part of him that's been kind of unpredictable. Like you don't know what he's going to say. You don't know, what type of threat he might come out with. I mean, at one point during his presidency, he was actually asking if it would help to nuke a hurricane. Those are the type of things that come a little bit out of left field. Like you can say, well, we've seen him say that, but that doesn't, the next thing could be just as out to left field as well. So with that sense, it's like he doesn't follow a very predictable path. Although you can argue, and I think you might be here, that his unpredictability is predictable. That he's, you can predict that he's going to be unpredictable. But, whereas I think when you're looking at somebody, whether it be Kamala or whether it be whoever, anybody who's not Trump, who's in that role, it's a little bit more of a, you have a better idea of what the outcome will do. Like if you're going to push the envelope as another leader, you have a better prediction to what's going to happen. Whereas I think with Trump, you may think that but you really don't. All right. Mary says, like button people. So hit that like button, folks. Yeah, absolutely. All right. Now, let's get back. We still have more news. There we go. All right. And before we get to the news, we have, let's see here. Missy's in the house with a hello, Candace. Hi, Missy. Good to see you. And I should actually have a sip of coffee while you guys are hitting that like button, because Mary did put the call out. And I did see a couple of those likes flying, so that is always good. All right. Now, let me bring up our next story. So we had some sales data. Sales data for August dropped. So in a nutshell, month over month, we came in at 0.4% increase in sales, August sales. We were anticipating a 0.5, so we actually did come in a little bit softer. Now, the previous month was at 0.9. Year over year, we're sitting at 1.4. So sales were up in basically 4 of 9 retail categories. So the big winner is motor vehicles and parts dealers. They were up 3.5%. And in there, if you look at new cars were up 4.3%, while the used car dealers were only up 2.1%. So that's pretty cool. Now, core retail. So core retail is basically retail minus gas stations, motor vehicle, and parts. That was down 0.4%. And food retailers were also down 1.5%. Home and furniture dealers were down 1.4%. Overall, though, the volume, even though we were down on some of these items, the overall volume was up 0.7%. Now, Statistics Canada says that its advance estimate of retail sales for September is pointing to a gain of 0.4% for the month. So we'll have to sort of see how that comes in compared to those expectations. So one of the things that we do want to sort of see is we do want to see sales starting to pick up. And I think this year they will pick up as we get deeper into the rate cuts. People, and we had a story last week, we had a story about holiday spending, and people are expected to spend a little bit more this time around. So that's not too shabby. So hopefully we see a bit more, especially if we get this big one. And if we get a big one in December, that could really help improve things quite a bit. So that would be good, definitely, for all of us. All right, let's see what else we got here. All right, Michael says, I wouldn't worry about Trump, and you have the rest on Congress that must agree with him, and he mostly talks, but strong talking only. Yeah, I mean, obviously, that's the thing with the U.S. system. We at least have a little bit of a buffer. But if you look at, while the House is still under Republican control, he might be able to get a few things through. But keep in mind, in 2 years, that could change. It could move back to Democrat control, and then at that point, nothing gets done, and that'll be one of the challenges. So, if Kamala gets in, don't expect a lot of her big stuff, the big stuff that she wants to do. Don't expect a lot of it to happen in the first 2 years, because the Republicans are going to stonewall her. Unless she comes up with something that's that they agree with. So there may have to be some deals or something that happen there to get stuff done. But for the most part, we probably won't see a lot get done in the first 2 years. All right, let's see here. David says, what do you think of Pro Real Estate Investment Trust? Okay, let's pull this up here. Oops, give me a second. I got to get over to the right screen. All right, PVR. All right, here we go. Or PRV. PRV.UN. So here we go. So this is the Pro Real Estate Investment Trust. All right, so let's take a look. I'm going to pull up the 6 months on this. And the reason I'm pulling up the 6 months is because this is where the rate cuts began, right down here in June. And you can see that, we've had some pretty good movement. Now, we've had a bit of a retraction, and this is kind of normal. And now we're starting to move up a little bit more. So I'm very, very bullish on real estate. And, this isn't that expensive of a, it's not that expensive. But I mean, look at this movement. I mean, they were sitting down at 467, 463 down here in June. They're already up to 589. We have not yet seen the pump in prices that we're going to see from this recent the 50 basis points. It takes, it takes a little while to filter in. But yeah, this is not a bad one as well. I'm pretty bullish on anything real estate, to be honest. There's a couple that there's only one, I think, Slate Office REIT that I'm a little bit weary on. But we looked at this the other day, and let me show you something here. Let's go back to Slate Office REIT. They actually are starting. I'm going to pull up the 6 months. They're finally starting to see a little bit of movement up, and I'm like, okay, a little late than later than never. I'm going to go to the 5 year, and you can sort of see. This is a REIT that was absolutely decimated. Like here is, like this right here is from the pandemic in here, and they recovered a little bit. There was pretty much, this is mostly the bear market here, but the aggressive rate hikes absolutely decimated them, and they haven't bounced back as much as other REITs. So that's something to keep in mind. Their bounce back has been very, very slow. So personally, I wouldn't touch this one personally, only because, it's like, come on, guys, why is it taking you so long? When you look at other REITs, well, let's look at the other Slate one, SGR. So this is their grocery REIT. And when we look at this one, you can see that recovery. Nice. It's a nice recovery, as you see with pretty much most REITs we're seeing this with. Here's, of course, RioCan as well. Pull up RioCan, and let's just look at the last 6 months. Here you go. And you'll see it's pretty much the same shape with all of them. But here's my thing. If you have a REIT, any REIT, and it's not pulling off this recovery, what we've been seeing with the other REITs, then that's the ones that I would question. But in terms of PRV.UN, they are following this, and that does make me a little bit good, a little bit happy with them for sure. Okay, Missy says TD. All right, now TD. I don't know why I have to actually type it out. I have to type out Toronto to get TD for some reason. All right, so let's go back to. We're going to go to the 3 year on TD. So TD, of course, has had a lot of struggles because all of that money laundering stuff absolutely crippled them. It hurt their reputation. They lost a lot of their big expansion plans into the U.S. market. So they have come down, and as you can see, they got all the way down here to like 74. So they have had a little bit of a recovery. And here's the thing, now that the big expenses, the big fines have already hit, there is the opportunity to recover, but it's not going to be fast. I think they're going to be very slow compared to the other banks. And, and we looked, actually, here's the funny thing. We did actually look at all of the banks on Friday's show. We pulled up and looked at all of the banks, and TD, of course, being at the dead bottom when it comes to their total return for the month. So it's going to be very interesting. It will definitely be very interesting. And, well, you know what? I'll show you right now. I'll show you guys here. Let's go into this new thing. It's called Technical Insights. I'm going to turn this into a straight line graph to make it a little bit easier. All right. And I'm going to, let's add the comparisons here. So BNS, there we go. National Bank, there we go. Royal Bank, there we go. CIBC, there we go. And I think I'm missing one. I think it's BMO. There we go. So here are the banks. These are the big six. And this here is right now. This is for 5 days. Let's go to 1 year. Here we go. So this is the 1 year total. It's not the total return. It's the share prices return. So it doesn't have the dividends factored in. But yeah, so the share price, they all start at zero because obviously this is where they all began. So in the last year, you'll see down here at the bottom right here, this is TD, 1.44%. I think I have to click on it so you can see it, but yeah, there we go. 1.44%. At the top, up here at 79.01%, let's go over here, good, it's showing me all of them. So yeah, at the very top, we have CIBC. They've been absolutely kicking it all year round. But you can sort of see this is where the banks are coming. And TD is at the bottom. Unfortunately, I think they're going to be at the bottom for a while. Not forever. Probably the rest of this year, probably into 2025. But we will see some recovery. I don't think they're gonna go much lower than they are. I think the worst is over, but their recovery will be slow, and the rest of the banks, well, they're absolutely gangbustering this year. They're doing really good. So just something to keep in mind. This is what I was geeking out about, I think, on Wednesday. I love this new feature of TMX. So very, very cool. It's going to be very useful, too. All right. Michael says, I've been looking at PFE, and the revs, the last 2 quarters were strong with a 42 dividend each quarter. So PFE, Pfizer. So let's pull up Pfizer. There we go. PFE right here. All right. Now let's actually go back in time a little bit. All right. So Pfizer, I wouldn't even go further back. I'm going to go all the way to 10 years back. Pfizer is this company. Like, I like Pfizer. I do like them. I know that they have suffered big time after they went up pretty big during the pandemic. No doubt about it. And a lot of this is artificial. Like, they did go up. They actually did. But there was so much being pumped into Pfizer, Moderna, in the lines of getting all of these vaccines out. That did sort of pump them up a little bit. But they have suffered quite a bit, yeah. But here's the thing. This company, it's not all about these vaccines. This company has a lot of irons in the fire. I do think that they will recover. I think right now, while they're down, I think this is a good buying opportunity. I think you're in good buying territory. This is a company, you were mentioning their dividends here. So they've got a half decent yield, 5.9%. It's a quarterly dividend, 42 USD. When we go into their key data, so right now they're not profitable. No, I just said I don't like non-profitable companies, but I do think that there is potential here still with this company. I mean, this is a good company. They're on hard times, but I do think that they have a chance. They definitely have a chance to make a comeback. Now, you'll notice their debt to equity, it's only 79%. That's not bad for a company of this size. So, they're not super overladen with debt. They do have some debt, but they will recover. How soon will it take them to recover? I don't know. I would want to do, and that's the thing. This is kind of like, we're just sort of scratching the surface. I would want to actually go deeper into their financials to look at them. So, I mean, if you're looking at Pfizer and you're like, okay, they're down. Candace says they're down, that they might go back up. They probably will, but still go in and look at their financials. I'll give you another example here. If we go to Simply, all right, let's go to Simply Wall Street or simplywall.st, and we put them in here. They do a whole bunch of little things here that they like to test. So they're showing that the earnings are forecasting to come up. That's pretty cool. And let's see here. I have to do the full report thing. So yeah, like right now, they're showing the fair value at about $81.25. So that puts them undervalued by quite a bit. And that's kind of where I'm getting at. I think this company is worth a lot more than what they're currently trading at. So I do see them as going up. And actually, let's go over here. Now, this is showing analysts are thinking it's going to be a slow rise. So right now, analysts are predicting basically about 17.1% in growth over the next year. I would agree with that. I think they will get back into being profitable. So I do like, this is your best pick of the day. Your best pick that you brought in here so far today. I do like it. Skid says no. Oh dear. All right. Ian is in the house with a hi. Just got here. Hello from Paul. 9. I knew this was going to come up. Did you see the new video of banana bread in a t-shirt promoting Moo Moo? Oh, I did. I actually, normally I will watch his video and I'll normally comment. I could not comment on this video because, as you guys know, I have been holding firm that I'm not selling out to Moo Moo. But I will say that looking at the math he presented in there, there are circumstances where I think Moo Moo may not be that bad. Because I will honestly say I did not look into, the whole scenario of conversion from a Canadian to US. So there are a couple of things that, it might be good for certain niche situations. But I'm still not going to, I said firmly that I'm not going to promote Moo Moo, and I'm not going to. I'm not going to back down. I will not flip-flop. I will not do sponsored Moo Moo videos. Considering looking at some of so the way it works is that you can save more when you're doing conversions from US to Canadian compared to, say, for example, Wealthsimple, where you have a conversion fee both directions. So from that, if you're heavy into investing American, a lot of times a lot of people would go over to like Questrade because it was usually would be a little bit of a better deal long term. So Moo Moo looks like it might actually be better for that. So that might be something to check out if you are thinking of investing in that way. But I would want to do the math myself before I would I do trust. I trust Adrian's math, but I'm just saying. I'm not going to give in. I'm not going to give in and start saying yes to Moo Moo because they ask me a lot. I'm very happy, I think, with Wealthsimple. I think the community. I think most of you guys like Wealthsimple, but if any of you do go to Moo Moo, I will not take any offense. So don't worry about that. If your investing situation, if the math makes sense, then I'll cheer you. I'll cheer you on the way if that's the case. All right. Paul says, let's see. What about REITs that issued more shares so the price went down? If you diluted, so if you had a REIT that did some dilution, that's gonna limit that upside a little bit when you go into recovery. So, for example, let's actually go. Let's go to RioCan here. All right. So here's RioCan. Now I'm coming down here into management section here because this here, first of all, this is one thing. This here is a beautiful thing. Looking at RioCan, and you guys, I actually have this in my video, so you guys would be able to see that if you watch the RioCan video. But you can see in the last year, we've had a lot more shares bought than sold. So that, to me, is always a good sign that a company kind of feels a lot of confidence. Now, if I come down here, here's dilution, so share dilutions. So this one here will let me know. So in this case here, nothing really has happened. So, they say has not been meaningfully diluted. That doesn't mean to me that maybe, who knows? Maybe they printed 100. I don't know. That would really not impact it. You'd have to print a fair amount to impact. But this to me is great. This is one of the reasons that RioCan is one of the ones that I'm very, very bullish on. Now let's take a look at Slate Office REIT. I have no clue. I've never looked at this, guys. Right away. Interest is not covered by earnings. Earnings have declined 63.6%. A high volatility. Oh dear. Let's go down to management. Let's see if they have... well, this is interesting. They have had more shares bought. Though it's bought by one company. It might be because they're down so far. But let's go down and see. Okay. I'm surprised. I was thinking maybe that's why. Maybe that's why. But no, they haven't also had any share dilution in the last year. So that's not too shabby as well. So, that's a good thing. That's a good thing for sure. All right. All right. Bismarcky says, Slate office is a hard no. Yeah, exactly. They have a building West End, Toronto. Every time I drive past it on the highway, the parking lot is really empty. Yeah. Lisa says, hi, everyone. Paul says, with TD, the CEO is retiring spring 2025, so maybe a new CEO will change direction. NA, National Bank is best bank stock. Yeah, I do like it. I like National Bank quite a bit. Although we are getting a bigger return on CIBC. So, all right. King of Day says, could you take a look at Upwork? UPWK for me. All right, let's take a look. UPWK. Oh, let's go. Back over here. UPWK. Here we go. Upwork. All right, so it's listed at 1236. Oh, look at that. There's a nice little jump there in the last 5 days. But let's go back. We'll go with the 3-year initially. So, okay. So they have definitely suffered a little bit. But we got a little bit of bump here at the end. So I don't like this shape. I will honestly say I don't like the shape. But let's take a look at a couple things here. They are profitable. So there's a plus right there. Nice. I like that they're profitable. I think they do. This is kind of like, basically, okay, so they basically enable businesses to find work with highly skilled independent professionals. All right, so platform for hiring and freelancing. Okay, I can see a need for that. That's, I'm okay with that part. Let's take a look down here. Oh, that's interesting. Their debt, you never see that often. Their debt to equity ratio is exactly 100%. So for every dollar in assets they have a dollar in debt as well. But they have a pretty good return on equity, 22.80%. Return on assets looks strong as well. This is kind of interesting. It's kind of interesting. Like I said, they have suffered, but we are starting to see a little bit of movement here. So this is one where I'm going to go back even further and see, okay, you know what? It's kind of interesting where this here is all located. So we'll take this is pretty much all during the pandemic. So I think what you almost have to do, and if you think about it, I almost called it the plandemic. During the pandemic, we had a lot of issues with labor shortages. There was, we had that time when it was very hard to find employees. A company like this absolutely would have boomed during that, and I think they did. It looks to me like they just absolutely boomed. So I'm going to call this here as being kind of an artificial rise. I think this was all inflated because of, the situation. The pandemic caused this. So let's go further back. All right. Well, they started here just before the pandemic. But this makes me think that if we ignore this, they're probably not in as bad shape as we think they are. They are moving forward. And I think as things work out, there is some potential here with this one, King of Day. I'm not super excited. I think I would still be very cautious with it, but I do see a little bit of potential, and I do think you have to ignore this. I think you really have to ignore that. A lot of people, especially when they start looking at charts and they start going back, a lot of people don't interpret what happened in the pandemic and realize that those conditions were kind of unique. Well, maybe not unique. I mean, it happened back in the Spanish flu, but those conditions created unique things in the markets. Everything from the job shortages. We also had money printing like crazy that absolutely basically sent tons of money into the market that shouldn't have been there. So there's all kinds of interesting things about the market when you look at that pandemic area. So I would say ignore that. This company it's been flat, it's been moving, but you know, it's profitable. It's profitable. It has really good return on equity. So, and I think if you're somebody who's getting in this area down in here where we are, um, I think you'll probably get a return. I think you will. Is it the best company? Probably not, but it's not, I don't think it's that bad. And I think you have to ignore that. Anyway, that is what I think about it. And you said no. I told her to focus on ETFs until she's built more capital and can withstand any blow from individual stocks. Oh yeah, I'll agree 100% with what you said. There's potential. She could make some money, but she's going to make a lot more money on something even like VFV. Just a simple, VFV. There we go. To me, this is a much safer bet. We'll just come out here to the 3-year. There's that bear market. But this is definitely a much safer bet. So yeah, because I would be more or less like with Upwork, I would look at that as like, as long as I have all of my core foundation stocks, I'm happy with my portfolio. This would be more or less something that if I got involved with it, it's because it's just, it's kind of almost like the play. I don't want to call it play money because it's not a penny stock by any way, shape, or form. It's just one I would be a little more careful with, for sure. And if she's just starting, it's not for her. It's definitely not for her. She should be, as you said, ETFs. Yeah, absolutely. Or at the very least, more blue chip stocks. All right. 9 says individual big 6 bank stocks are the most volatile for me, TD and BMO especially. Yeah. Absolutely. All right. Vic is saying so much road work on on the weekend. What's going on with that, right? On a Sunday? Candace, why CDR Pfizer lagging Pfizer USA? That's a good question. That is a good question. Let's, I don't know if I can compare them. Let's see if I can. PFE. All right, so here's regular Pfizer. Let's pull it up. I'm going to see if it will let us. This could be very handy for something like this. Let's see here. PFE. All right. Here we go. Pfizer CDR. Let's see. OMG is that one that we normally look at. All right. So let's grab this. I am going to turn this into a line for Pfizer. Okay. That's just recently. Let's go to a year, though. Let's take a look. All right. So it began here. I don't know, Vic. It's not, they're looking pretty close. So according to this in the last year, Pfizer's been down 6.87%, while the CDR's been down 6.16%. So it looks pretty darn close though. And that's kind of what you would expect when you're looking at, when you're looking at a CDR compared to the thing. There will be a bit of a difference normally. So I'm actually a little surprised that Pfizer, the CDR, is on top. I would almost expect it to be slightly below because, you have to take out of it management fees for that, for, I think, CIBC. And then if there are any dividends on Pfizer, and I'm trying to remember if there are, I thought they had I thought they had a small dividend. I'm not sure. I can't see it right now, but there would be withholding tax that comes off of that before it gets paid to CIBC at the same time. All right. Let's see here. So yeah, I'm not sure what's going on with that. Ryan wants to know, here we go. Which are your favorite REITs to consider buying? All right. Well, let's see here. There's a lot. Like, to me, this is the way I look at it. There's so many really good ones. Like, of course, everybody knows about RioCan. And I've also mentioned RMAX. So RMAX is that ETF that I've been liking. All right, let's just pull it up here, the 6 months. So this is, you got a half decent dividend on here as well. It is investing in 50% US, 50% Canadian. So I like it. I like it for that reason. There are other REITs out there that I think are all fantastic too. I've just been liking this one, but I also like Hamilton. I do like Hamilton. Now, there are, of course, let's see here. I'm going to show you something. This is not technically, it's not technically a REIT, although it acts like a REIT. And at one point, I think it used to be classified as a REIT. But we're going to go to the year. This is SIA. Now, this basically they manage old age property, so advanced care facilities. And look at this. Just look at this. They've gone from $10 up to 17. So they've been moving in the right direction. And they've got a pretty good yield here, like 5.398%. So they've been doing pretty darn good as well. So that's the thing. You have to sort of not limit yourself to just REITs. Like that's why another thing too, like Timber Creek Financial, I always talk about these guys as well. Now they are an MIC, so they're in a mortgage investment company. So they behave pretty much like a REIT. Let's go to their 6 months. And you can see in this case here, since the rate cuts, they've been going up. Now they've corrected a little bit, but they actually haven't corrected quite as much as what the REITs have. And now they're getting ready for that their next pump with, of course, that 50 basis points that we got. So, that's not too shabby there. Not too shabby. All right. Lisa wants to let Pfizer tank. 9 says Pfizer is in ETFs I own, but I don't like the company. Yeah, and that's the thing. But keep in mind that if you are, what's the word for it? If you're mad at Pfizer because of the vaccine, and some people are absolutely mad at Pfizer, at Moderna. They do a lot more outside of that. There's a lot of medical stuff that they do. I actually did a deep dive on Pfizer probably 2 years ago or so. I mean, they have done a lot of stuff in medicine. So yeah, it's kind of interesting because I know some people are like, the whole vaccine thing became more of a, we don't want to be forced to have to do it. And I don't think anybody actually was, but it was still a mess. It was still a mess for sure. All right. Anthony says, let's see, the last 2 quarters of Pfizer was profits of 0.82. Then last quarter was 60, but 3 quarters ago was a profit of 10. And profit are up this year. Yeah. And that's the thing. I mean, they have quite a deep moat. Pfizer's going to be fine. All right. Skiz says, I appreciate the non-sponsored stream. Yeah. I mean, if I pick up a sponsor at some point, I've had rules. My rules for the sponsor is that it's going to be a product that I absolutely believe in. I'm not going to put something up if I am not willing to use it myself. I'm not willing to sponsor it. So that was kind of where the whole Moo thing came in with that. I don't know how, and this is the thing, it's really hard to say whether I would put I don't think I would put a sponsorship on the actual live stream. I think that would be more of like a video thing, like, hey, this video is sponsored by Banana Bread Co. because they make the best banana bread in the world. Yeah, sure, I could do that. But I'm not going to sell out. There's been a lot of companies I have absolutely said no to. Well, I've said no to everybody. I've had like a crypto casino. Like, actually, they still bug me. They're like, "Oh, we'd be a great fit for your channel," and I'm like, "No, you wouldn't. I'm not putting a crypto casino on here." So it's just, it's never gonna happen. All right. 9 says, and just a second. Mary said, good for you on Moo. Thank you, Mary. 9 says, Moo too new of a brokerage for me to trust. Plus, I think they have ties to China. It took me a while to trust Wealthsimple. Fair enough, fair enough. Now, I think Moomoo originated in the U.S., so I'm not sure how that ties to China works, but I have heard it before. So, it could be. It could be. I can't confirm it, though. I don't have any proof one way or the other. All right. Andrew says the only real estate I would invest in based on my long-term model is MEQ. Well, let's take a look at MEQ. We also got to get back to the news. I think I still got one story left. All right, MEQ. So we're looking at what? Main Street Equity Corp. All right, let's pull this up here. Let's look at, we'll start with the 6 months. And look at this. Same story. But look at this. They have not had that correction that some of the others have had. So that's not too shabby right there. Let's pull this up here. So yeah, they are a REIT, so residential real estate company. Mid-market rental apartment buildings. Yeah, and there's a huge demand for apartment buildings, anything that accommodates like that. So multi-residential units, things like that, apartment buildings. Absolutely cool. Yeah, this is a good one, MEQ. So, that would be another good one for anybody who's looking to do some research on REITs. Yeah, throw MEQ in the mix. Let's see, is Wealthsimple really offers? Okay, I'm not 100% sure, Terry, what you're asking, but I do like Wealthsimple. It's not a perfect, like, Wealthsimple's not perfect. I'm not going to try to claim that it is, but I do like it, and I think it's very good for beginners. I think it's very good for people who are not, like, if you're investing almost entirely in U.S. funds and U.S. accounts, or U.S. stocks, maybe Wealthsimple is not the best place for you, but there are better places, like even National Bank, I think, is better when it comes to holding a lot of U.S. stuff. All right. And Paul says the Moomoo conversion rate way better at 0.09 plus $2 USD versus Wealthsimple's 1.5%. Yeah, no, absolutely. And that was some of the math that Adrian was showing in his video. So that's why I was saying that Moomoo could be better for somebody who is doing a lot of the U.S. stuff. I still have to do the math to verify that, but I do trust Adrian's math. So yeah, I think that there is a case for Moomoo in certain situations for sure. All right. Nice says, how should I think about a company like this? Okay. Good. Here we go. I was about to say, a company like what? Dividend Select 15 Corp. Oh boy. All right. So this is a split core. Let's pull it up here. Dividend Select 15 Corp. Here we are, DS. All right. So because it is a split core, yeah, it hasn't really had a good, it hasn't been having a good 3 years, but you will see that rate cuts have been pretty good to this one as well. Now, part of the reason though, so let's come down here for a second here. All right. So this here is basically, it's a split core here. They are holding in, let's see here. So that, all right, the company, there we go, 20 companies. So they're holding a lot of really good companies. So some of the banks, Shoppers Drug Mart, some of the financial companies, some of the communication companies. So they're holding companies that are responding better to the rate cuts. That's one of the reasons that we've started to see this movement up. And you do have a crazy dividend on these. So in this case here, well, it's not that crazy, 9.82%. But it is a split core. Now, because it's a split core, there's a couple of things that will happen. You will get, from time to time, you will get into a situation where it may have to cut its dividends for a little bit. That's just kind of how split cores work. Now, normally that doesn't happen when we're in a big bullish movement. A lot of times that will happen when we're going down, like in a bear market, things like that. The other thing you have to be aware of with a split core is that you're going to have a good amount of return of capital. So what that means is when you look at that dividend, a lot of it is ROC. So you're not going to get taxed on ROC. Well, I don't want to say that because you are, but you're not going to get taxed on that dividend, on that part that's ROC. But what it's doing is it's reducing your adjusted cost base. So let's say you bought all of these shares at $6. Well, after a while, you'll take a look and you'll look in your you may look in your broker and you'll say, oh, my adjusted cost base says $5.80. Well, that's because it went down because of return of capital. So if you sell it, you're going to get your capital gains are going to be calculated from the $5.80, not the $6 that you bought it at, because they gave you back some of your initial investment. That's what return of capital is. So that's one of the other issues with it. So if you're going to hold a split core, your TFSA might be a better place for it. Well, might. And this is, I'll explain why I say might. Because you are going to get, you will not have to worry about any of that tax stuff. You won't have to worry about the capital gain stuff. You won't have to worry about everything else. But what you may have to worry about is when we are in not great, and this is where we're going to go back here. So if you look, this here is the bear market and the rate cuts, and you can see this thing was up at $10. So there can be, it can get hurt pretty bad. Some of these some of these split cores, and you can sort of see. So in this case here, if I was holding this in a TFSA, a whole bunch of shares at $10, all of a sudden it's down here at at $6. There's space that's just gone. So you don't get that space back. Well, I mean, if this were to recover back to $10, sure you would. But a lot of times it takes them a little bit longer. Like if let's go further back. Let's go to 5 years. You can sort of see here was the pandemic. And then we had a bull market, and this was the bull market. It did really, really well, and then, and then we went into that big bear market right there. If we go back 10 years, you can see that even here, when, we're kind of on a big downward trend with this one. It's just one of these things. I don't think you're ever going to amount to a lot with it. If you're going to invest in something like this, you have to be doing it for the income. And even then, I think that there's better choices out there. At one point, to get a really big income, you almost had to include a lot of split cores. And I think now we're at a point that you don't have to have as much. So I always say be a little bit careful with something like this. There are better options out there. I'll give you one example right here. Everybody loves HYLD, and I did a recent deep dive on them. And this one here, we just take the last year, it's been on a big tear up. Now, with HYLD, they're using covered calls and they're using 25% leverage. So in a case like this, if we start to slide into a bear market, you're getting out. You're absolutely getting out. Because let's go back further. Let's go back to 3 years. They started this fund at the beginning of a bear market, and you can see, bang. They've recovered, but they haven't recovered fully. And a part of that is because of the covered calls. So every time you go up really fast on some of these things that you're holding within that, you end up having options. You hit trigger prices, and then you have to sell and you have to buy back in. So you can lose a little bit of that upside potential, and you do. You lose it on the way back up. Actually, the very best way to see that is with BTCY. You can see this perfectly. So this here is the Purpose Bitcoin Yield ETF. It uses covered calls. And we're going to go back here to the beginning. So here's the beginning. This here launched pretty much when Bitcoin was at its zenith back in 2021. So you'll see here, November 2021, it launched just as Bitcoin crashed. And it crashed with it. It went from quite literally almost $10 down to $2.58. So it crashed big time. Now it has come back. Bitcoin has hit all-time highs. But you'll notice these all-time highs are nowhere near where it was at before. Why is that? Well, as Bitcoin explodes, you get price triggers. The longs that they're using on the covered calls get triggered, and they have to sell because that's part of the way a long works. So somebody who bought the right to buy it at a certain price is buying it, and they may be buying it. Let's say, for example, Bitcoin was at we'll say Bitcoin was at 30,000, because this is all on their way back up. If Bitcoin was at 30,000 and they had a right to buy it at, let's say, 35,000, and all of a sudden Bitcoin exploded up to 40,000, well, even though Bitcoin's worth 40,000, they have to sell those Bitcoin at 35,000, because that's what the options say. So they don't have a choice. And then they would have to buy that back in at 40,000. So there's $5,000 of room that are no longer going to be reflected in trying to get back to here. And every time that happens, this height gets knocked down a little bit. So that's just a general idea. That's one of the things that does happen in covered calls. And you have to be aware of it. So it's when something is going to, so if you have something up here, and myself, I had some up here. Once we had the first initial crash, I think I got out around here. I use it now. Like, I do use it as a for swing trading, but I got out for that very simple reason. So we'll just anyway. I guess I kind of went off on a little bit of a tangent here when you were asking about dividend select 15. All right. Lisa says you said it right in the first place. All right. Okay, here we go. Is Wealthsimple really offering a new iPhone or MacBook scaling up with deposits of 100,000, 200,000 and 300,000, or did I? They have done stuff like that before. Offered iPhones. I haven't heard the new deals recently, but it might be. However, here's that thing. If you got this in an email or something, just go to Wealthsimple and see if they actually do have any kind of deal. Because they do regularly have deals. I can pull up Wealthsimple here on my iPad. I don't know if it'll show me, but let's find out here. Hello, this is my fingerprint. It doesn't want to accept my fingerprint. All right, 9. Okay, there we go. Okay, just be a second here. I'm just going into Wealthsimple. I'll let you know if I see anything. All right. That's not what I'm looking for. All right. So far I'm not seeing anything at all, but that doesn't mean, let's see. Invite friends and get, okay, that's the normal thing. There's some kind of a deal on mortgages, but it's not showing me anything in here as to moving stuff over. So just double check before you especially an email. Nowadays, you really have to be super, super careful. You can get an email that looks 100% legit, but I will almost, anytime I get an email with any kind of offer from a company that, even if it's a company I like, and if I like the offer, I still will go to that company first. Make sure, make sure it's legit. You don't want to get scammed. That's what I would say to that. All right. Is Upwork like a company that gets people jobs? But I've been looking at Job, which trades at area with no debt with 19 million in cash. Let's take a look at Job. I haven't, I've heard of it. I just haven't looked at it in forever. All right. Oh, Michael, it's another penny stock. But at one point, well, it was still a penny stock. But yeah, they've been kind of on a downward trend here too. And you'll notice, though, they did have that pump. They had that pandemic pump a little bit too. So that's always something to keep in mind. I think any type of work like this, you're going to get that pandemic pump. All right. Let's see. First good stock of the day, VFV. Oh dear, that's funny. But VFV is it's a great ETF, absolutely. All right. Hi Candace. Any thoughts on Robert Kiyoski's crash prediction for November 2024? I Here's the thing. Nobody knows what the market's going to do. Um, you can predict. You can predict a crash, and people do. There's a lot of people that predict crashes over and over again. And finally, when they do get it right once, everybody sort of looks and says, "Oh my God, they were a genius." They don't look at all of the times they've been wrong. So it's kind of like that. A broken clock is right twice a day. Sure. Is there going to be a crash in November 2024? I don't think so, but I could also be wrong. You know, I'm, I'm not steadfast on it. I like I'm not, and I'm I'm confident enough that I'm not. I'm sort of not in shoring up a zone, if you want to call it that way. I'm not, taking precautions against a massive crash that, one or two people have predicted. I've also heard ideas that we're going to get like a 26% drop in the beginning of the new year. I've heard a lot of different scenarios for crashes, and I've been hearing these quite simply. Pretty much for more than a year, people have been predicting, oh, there's going to be a crash soon. There's going to be a crash soon. I'm not subscribing to that crash yet. I think we still have runway left for this bull market. Now, and I mentioned this the other day. I mean, an average bull market's about 3 years. We're not there yet, but, and that's an average. Some bull markets have been shorter. Some have been longer. We don't know how long this bull market is going to go. However, as long as the economy doesn't slip, as long as jobs don't continue to go, unemployment starts continuing to rise, as long as we stick to those soft landings, I think we're fine. For now, yeah, we could definitely have a crash somewhere down the road, but I think November we're going to see a bit more stability, especially once that election is passed. So the first week in November, I'm pretty much expecting volatility, and I wouldn't even be shocked if the first week in November is a red week. Wouldn't be shocked at all. We may even get a little bit of volatility at the beginning of this week, but keep in mind November actually starts on Friday, so it's going to be interesting. It's definitely going to be interesting. I don't think we're going to get a crash. I'll leave it at that. I'll leave it to that. Got it on the dip. And Skiz says I'm up 35% on SIA. See? SIA? That was another good stock. So not the only one. Lisa says up 65% in less than 2 years. Not too shabby. Not too shabby. All right. And Michael, still talking about Pfizer. Let's see. Burgeoning tiff with activist investor group Starboard Value. Looks like it's escalating since the activist took a $1 billion stake in the drug developer. Okay. Fair enough. Lisa says, maybe not forced to take the COVID vaccine, but many were given ultimatums. I went without income for 6 months because I wasn't comfortable taking the shots. Forever holding a grudge. Okay, fair enough. Yeah, I mean, it shouldn't have been that as diverse as it was. I think it's a situation where it's like, okay, if you really don't want it, then, I'm always hesitant to sort of say that we have to force somebody to do something that they don't want to. But yeah, I did get the vaccine, but mind you, I was living with at the time. I was living with my parents, and both of them being senior citizens, it's like I'm just not going to take the chance. Plus I'm sure they didn't want me to take the chance either. So I respected that. Let's see. On top of that, it did nothing to stop transmission in the workplace. No, I mean the whole idea with the vaccine, and was that it was not a it was not really it wasn't like I don't want to say a cure. It wasn't a prevention. You know, it wasn't a vaccine that would stop you from getting it. More or less, though, it would give your body some exposure to it ahead of time, so that way there, if you did get it, it would be less severe. That was kind of the whole general idea. But I don't think it was well explained. Like, I don't think they did a good job of explaining it. And part of it, too, is they were still figuring it out all at the same time. Bismarcky says, no dividend with MEQ. Oh, there we go. I did not look at the dividend. That could explain why it's doing, why it's still doing well when the others had a little bit of a correction. That would definitely explain that for sure. Paul says, then I saw someone posted complaining about a trading penny stocks of an $800 value that got charged 58 trade. Oh my God. Yeah, that's not good. It's one of the reasons that I really hate commissions, just because, you know, there's certain things like you take Moomoo, even with their, you know, their commissions are not super high, but, you know, if you're a trader, I mean, that automatically becomes inappropriate because you have to then compensate for the commission as well. And that could, if you're like, for example, there's a method of trading called scalping. It makes it much more difficult. All right. Prairie says, I'm hoping the latest rate cut helps Northwest Health, as the previous few haven't done much, mostly flat for the last 6 months. Let's take a look. Northwest Health. I used to hold them quite a bit. Like I liked Northwest Health. All right, let's take a gander here. We're going to go to the 6 months. All right, so yeah, they haven't, I mean, they have had some, like this is not bad. They've gotten up a little bit. They've got a bit of a correction. They seem to be doing it a little bit more harshly. Yeah, their yield is up at 6.8%. They've been doing it a little bit more harshly, but yeah, I can definitely see them. I'm going to come back out. I'm going to back out here. So this here, I mean, you know, they're still half of what they used to be. Now, I wonder, since we're here, whoops, over here, let's just take a look at Northwest Health. I'm just kind of curious if they, whoops. All right, Northwest Health, here we go. Let's pull them up. Oh, wow, look at that. Their earnings are forecast to grow 111.36%. Oh, that's really big. That's big. But all right, I'm just going to double check that last little thing here. All right, let's head down here. Oop, did I already zip past it? I think I did. Yeah, no, they haven't actually diluted their shares either. So I'm hoping with you too. I do like them. That's what I was thinking, Terry. I was thinking they might be scams, so I would be careful. Let's see. Wealthsimple was offering 1% on new assets. Okay. Let's see. Thanks, I'm from Sweden, but nice to learn about how your tax system works too. Great for your Canadian viewers. Yeah, absolutely. Well, yeah, that's right. Because where you're in Sweden, you're pretty much going to get taxed on everything anyway if it's foreign. Unless, of course, and this is where I don't know about the Swedish system. Like, do you guys have, NIS, do you guys have like a tax sheltered account that you use? Because I'm going to assume that you would have to. I know, like, for example, like the US has like the Roth IRA. I don't know what they have in Sweden. Tell me, please. I want to know now. Let's see. MEQ is not a REIT. They are a corp. Lower dividend, but it grows like crazy, and they reinvest most profits back into their company. So big growth. Yeah. Sounds good. Though they do, I mean, they're still in that same kind of area, though. That they're going to react, I think, mostly the same way that REITs are going to, but definitely nice. All right. Roku says, regarding HYLD, other people say the divs keep coming when the price dips. I also see the divs sometimes get cut a bit too. Agreed, it's a slow climb back, though. Yeah, they do. Do I still have them up? Let's go back here. All right, so I'll show you this here. So HYLD. Well, I guess I was trying to. All right, HYLD. Let's go this way instead. All right, so what happened with their dividends here? And I'm going to pull them up. Like, they started around 13 something. Let's go right back to the beginning. So right around actually 14. So they came out with a 14 cent. Actually, no, they didn't. Yeah, they did. Give me a second. Here we are. This is the beginning. I've gone all the way back. They came up with a $13, sorry, 13.8 cent dividend, monthly dividend. Fantastic. It actually did then raise up to 14. But then we went into the bear market and they did cut it down to 12 cents. So it wasn't a big cut. But since then, you'll see here, they already started moving it up to 12.1. And whoops, sorry guys, wrong direction. Then 12, then 13.1, then 14.3. So now, right now, it's bigger than it was when they launched. So that dividend has recovered completely. Now, mind you, if we go into another bear market, so let's say Dingle Dork is right and we go into this big crash in November, you'll probably see this get cut. Not in November, maybe not even December, but probably next year if that were to hold true. And I said I don't think it's going to, but it made a great example. So just something to keep in mind here. All right. Are insurance companies rate sensitive? Not as much as like a REIT is or a utility company. It's going to boil down to a couple of things. One, if they are carrying a lot of debt, and sometimes they are, that will certainly help them. Like rate cuts are going to help them, but I wouldn't call them as sensitive as things like REITs and utilities. But depending on how much they have debt-wise, and also depending on how much they have to pay out during that year as well. But there will be some impact, without a doubt. Well, actually, you know what? Let's go to everyone's favorite MFC, Manulife Financial. And we'll go to that 6 month here. Let's go here. And you can see here, like they have actually responded pretty well. Like in the 6 months, they've had quite a bit of movement up. 41. They were sitting at 32 at the beginning. That's actually not that bad. But let's take a look and see how much debt they're holding. Yeah, they're holding a good, not even that much. Look, 33%. So, they will be impacted. Let's actually go to, I'm going to go to SLF as well, Sun Life Financial. Let's take a look at that 6 months. All right. They have a little bit, but you'll notice that they didn't start right away. And that's kind of where I was getting at. So I think something else was going on with Manulife Financial that gave them a much stronger movement. But they are starting to see some, and I have to believe that some of this is absolutely the rate cuts helping in that sense. Now, kind of curious. Now that we looked at Manulife, yeah, they have a very small debt as well. Look at that, 29%. So that's not too shabby. Not too shabby at all. All right. Where are we at here? All right. I know I'm at Jonathan. Let's see. I predict that we will have a... Hi, kitten. Sorry, the cat is trying to get my attention. I predict that we will have a crash, but I don't predict when. Oh, we're always going to have a crash. That's just normal part of the economic cycle. But that's the thing. It boils down to when. And keep in mind, as you guys, especially the newer investors, as you get more seasoned with investing, there's a great opportunity with a crash. That's the time to be buying. That's when millionaires are made. Maybe not so much with a lot of us. A lot of us, I don't think, are at the point that we're going to make millions, but maybe we can become, 100,000 heirs or something, or 10,000 heirs, or for some of you, maybe 1,000 heir. But right now, I still don't think it's going to happen right away. But don't worry, I'm paying attention. If I start to feel or get a really bad feeling about the market, you guys are going to know about it for sure. All right. Let's see. Rocco says, yes, Wealthsimple is giving away phones and MacBooks. Okay. So the more you give them, the more powerful device. It's their new promo after the 1% match last month. Sorry for the late comments. Had to tend to dinner. No, absolutely. And you see, that was the whole thing. You just want to check it out. You want to make sure you're not being scammed. I had not seen that, and for whatever reason, my Wealthsimple wasn't showing it. But maybe if I'd gone to their website, well, what? Let's do that. We have. Let's see here, because I won't be logged in. Let's see. Wealthsimple, celebrate your wins. New rewards are here. All right. So let's see here. Is it going to give us these new rewards? Let's go back here and let's see here. Explore your benefits. Growing your wealth deserves rewards. Premium and generation clients unlock more. Okay. Reach a milestone. Take your pick from our curated partners. I heard about that. Guys, they should put this like right up front. Yeah, even going to their website, I'm not getting any information. Oh boy. Anyway. Let's see. TTNM acquisitions, 175 million in debt already. Yowza. Yeah, you gotta hate that debt. You gotta hate that debt. All right, give me 1 second, guys. Let's get I want to get the news done. All right. I think here. Let's see here. We are so close to being done the news. All right. It's our final story of the news, and then we'll get to, I think Michael's comment is up next. All right. So we got a small business inflation update. So 75% of Canadian small and medium-sized enterprises, we call them SMEs, they have been struggling with rising input costs. And 71% of these expect these challenges to persist, that would be a better word. So basically, even though inflation has gotten down to that 1.6%, businesses are still finding it harder to increase their prices, because now we're at that point where consumers are expecting prices not to go up a lot because inflation is down. So even if a business is struggling and they really need to raise their prices, they're having trouble actually doing it because of some of the feedback they're getting from their customers. So despite easing input costs, energy prices are still expected to stay high, and that's because of Kitty cat, what are you doing? Because of the geoeconomical issues. Now, hopefully, that's going to ease up if the whole thing with Iran, if Iran is willing to sort of let it go, and we'll have to see. But there's still a lot of stuff going on over there. Labor costs remain a significant challenge, with 88% of them expecting greater difficulties over the next 5 years. Now, one of the big things, of course, is this is where AI gets back into the mix. So one of the big recommendations that a lot of these small businesses are getting is the government has been telling them, hey, you should be using AI, because it can improve your efficiency and reduce some of those cost pressures. However, the problem is that a lot of the smaller businesses, there seems to be a big a disparity between tech adoption between them and the larger businesses. And that gap is especially expected to widen by 2029. So that's one of those things we need to see. We need to see them using a little bit more when it comes to tech. So AI in particular. Okay. Now you guys can see the kitty. The kitty has to actually come over to say hi, I think. Or she's just going to, I don't know what she's going to do. She's never done that before on a stream. She might be looking at the sign. It's hard to say. What are you... Anyway, she's making me... I just don't know what she's going to do next. So don't be surprised if she does something crazy, because she's a very hyper kitten. A very hyper kitten. All right, so coming out next week, guys, on Canada side, we do have our month-over-month GDP dropping on Halloween. So that will be coming really, really soon. Oh, she's looking straight at the camera. That was funny. On the U.S. side, though, we got a lot happening in the U.S. So on Wednesday, Q3 GDP is going to drop. On Thursday, the personal consumers expenditures is going to drop, so PCE. And then on Friday, November 1st, they got jobs data dropping. Earnings-wise, in Canadian side, we got Enbridge, we got Canadian Natural Resources, Imperial Oil, Fairfax Financial, TELUS, Synovus, Torlamine, OpenText, Air Canada, whole bunch of stuff dropping. Down on the U.S., we of course, well, we got most of tech. So Apple, Microsoft, Google, Amazon, Meta, Eli Lilly, all of these will be dropping their earnings. There goes the cat. So yeah, it's going to be a big earnings week on the U.S. I think the U.S. ones will have a much bigger impact on the markets for sure. So we're looking to those big time. All right. Okay, that is the news. The news is done. All right, I like that. That means we can get rid of. Whoops. I don't know what I just did. Oh. All right. Well, there we go. We'll just do that. We'll just zip back through the news. All right. There we go. We'll just leave the original one there, but we're going to be on the other screen most of the time anyway. All right. Perfect. Now, we got Michael. There we go. Let's pull up Michael. Let's see. When you was looking at BTCY, and what price was it trading when you was looking at it a few minutes ago? BTCY. Well, let's get back over there first of all. All right. We'll head back over here. Okay, BTCY. Give me a second here. All right, so I'm not sure where you're looking for the price, but currently it's trading at 651. Now, when it began, it actually started at, let me just take a look right here. There we go. So it opened at $10.04 when it originally opened. And then it quickly fell, and it got down all the way here to a low of about $2.52. All right. Lisa says, by the way, I have some exciting news. I'm retiring after almost 31 years in the auto industry at the end of the year. 53 years old. Ooh, you actually did better than the Freedom 55 people. So that's not too shabby. Congratulations. All right. Let's see. On a chart, I see trading at 45 over the counter. And was this the same BTCY that you were looking at? No, there's a US BTCY as well. I think that might be what you're looking at. Like BTCY. Well, it's not even showing it to me here. But there is one on the US, because I know that when I type BTCY into National Bank, there's a second one, US one that tends to pop up as well. But it's they're not. This one here is not seeing it. I wonder if we can. Let's see here. I wonder if Yahoo Finance BTCY has it. No, I'm not seeing it here either. So maybe it's like an old legacy something, but oh, wait a minute. No, right here. Look, BioCitry maybe? Let's take a look and see what that is. 0.45. I think that's what you're seeing is this Biotricity. So I don't even know what this company does. Don't know if Yahoo has a little blurb on them down here at all. Doesn't seem to, but no. That's Biotricity that you're looking at. So that's where that's what you're looking at. So BTCY is that's on the Canadian markets. That's the one that we're looking at. All right. Let's see. Niece says, I will do it on your Facebook page later this week. Busy this week. Okay, absolutely. Cool. Just, more or less just a curiosity thing. Michael says, which company were you retiring from? And it looks like the only one trading up on earnings is GM. Yeah, I think I remember. I think it was like, yeah. I remember. I'm just trying to. My head's gone blank, but it's like, no. I know what it is. Berger says, was listening to my eviction company stocks foreclosures are 54% lower than 2019 and 14% lower than 2023. They don't expect market recovery until 2026. Oh, yikes. All right. Oh, more on Kowalski. Talks about using debt to avoid taxes, but he probably pays a ton in property taxes on his real estate. Yeah. Well, there is, I mean, one of the way you're avoiding debt, like with using taxes, is if you buy, for example, art. So if you buy a very valuable art piece, and then instead what you end up doing is you then you take out loans with the art used as the collateral, and then you can actually write off some of the interest on the loans against taxes. And it's a big way to pay yourself without actually taking a salary. It's one of the reasons a lot of billionaires will, instead of taking like a salary per se, they'll take like a bunch of stock options and things like that, because they'll then use that as assets to do the financing with through debt. But I think that's where he was going with that. ZPR. So Sandra wants to know, what do you think of ZPR? Let's head over. Let's head over to ZPR. All right. ZPR. So, all right. So this here is your BMO Laddered Preferred Shared Index. All right. Let's see how this guy is doing here. All right. This is not too shabby. I mean, we got a good movement up, a little bit of a correction. That's normal. All right, let's take a look here and see what we got here. We have a half decent there we go. Sorry, everything keeps loading on me and moving. Half decent dividend yield, 5.128. All right, let's take a look and see what exactly this one is. All right, so it's basically it's an ETF of these preferred shares. So when you're talking about split core, that's pretty much what it's holding. It's holding split core shares. One of the nice things about going this way is that when one or two of them does suspend dividends, it's not going to impact you as much. Not to say it won't, but it won't impact you as much. So, it's not bad. It's not bad. It's not, I'm always very cautious with split core, other than there's a few. There's a few I really like. Well, I'll show you one right now. ENS. So this here is the E-split core. It actually, they actually invest in Enbridge. Let's bring up this year. And you can see, now this year hasn't been that good, has it? But that's because, let's go to the 6 months. If you look at the 6 months, you can see they've been responding well to what's been going on with the rate cuts. Now, Enbridge, I think, is actually responding better. Let's actually go over here to Enbridge. And we pull up the 6 months on Enbridge. Here we go. Yeah, but you'll see it's the same similar shape because ENS had this little bop as well before going up. So similar idea. But the nice thing with ENS, and we'll go back to ENS here, is you're also getting a half decent dividend here, like 11.827%. So it's a very good income stock that does have some amount of growth with it, which is kind of good. This one here, even during the pandemic, I think they suspended their dividend maybe once. But for the most part, they've been pretty reliable. So this is one of the ones that I do like. I know a lot of people as well. I think it's RS that a lot of people like. This here's a real estate split core. So, they do invest in real estate. Let's go to that 6 months and you'll see that it, same kind of idea. They had a little bit of a thing, but since June, they have been up and you can see that same kind of correction. So now what's nice about this one is, you've got a big dividend here, 12.332%. So that is something to keep in mind. So, I know a lot of people like RS, a lot of people like ENS. I like both of them, I do. So it's just, it may not be the play I'm taking, because where I'm, looking at a couple of shares, a couple of stocks, and our Max. What are you doing, crazy kitty? The kitty's just running around the floor underneath me, so I'm like, what's going on? But that's fine. All right, let's see here. ZPR. Okay, now, all right, I'm supposed to get 3 rewards, but I get sent for a loop when I try to enroll. Is that with Wealthsimple? Interesting. And also the rewards they are offering me don't interest me. Wow, that's not good. Yeah, I've seen places like that where they offer you the rewards. It's like, no, I don't want that one. I don't want that one. Give me something good. But what can you do? What are you doing, kitten? She's just down there. Now she sneezed. Let's see. Problem is where the evictions are currently taking place. So California, Washington State. It takes 3 to 5 years to foreclose because of the court system. Ooh, yikes. Yeah. I understand. All right. Google Wealthsimple 2024 Apple promotion. Okay. All right. Let's do it. Let's do it. Let's bring her on over. Google 2024. Whoops. All right, here we go. I think, come on. All right, oh, here we go. Here we go. All right. Let's see. Okay, can you guys tell me a little bit more about it? All right, how do I qualify for it? How do I confirm that I'm registered? Is there a minimum amount I must deposit to get an iPhone or an iMac? Okay, so yeah, so here it is, $100,000. Minus the total of your withdrawals made during the contribution period. It must be 100,000 or more. Okay, that's not really telling me a lot. They could have done this a little bit better. But yeah, this at least confirms that they have it here. Wow. Okay. There we go. So I guess if I had gone to their promotions section in here, that would have given me a bit more information. So yeah, it's there. All right. Let's see. Minimum. Yeah, exactly. Minimum of $100,000 deposit for an iPhone Mac Air. All right. And it's like, I honestly, and here's the funny thing. I mean, I love Apple products, but I don't want a Mac Air. You know, I've got a MacBook Pro. I'm happy with that. And I've got, my desktop is a Mac Studio. I'm happy with that. Yeah, I guess it's just that a MacBook Air doesn't have as much bells and whistles when it comes to processing power. So I'm very happy with what I have right now. So, but I'm not planning to move 100,000 over to Wealthsimple. Although, nope, they're not moving it to Wealthsimple either. I was trying to think of, I was thinking of somebody else, and then I realized, wait a minute, nope. Let's see. Paul says yesterday at work was given a stack of price tags to change. The last time was a couple of months ago. Ah, yeah. I imagine the price was probably still going up, but just not up as much. But yeah. No, when I used to manage a department at a superstore years ago, and every morning we'd have price changes. Every single morning. A lot of times it was basically we were, making sure our prices were in line with our competitors. All of that fun stuff. All right. Let's see. Good luck to you for Lisa, I guess. And I saw Tesla move. Yeah, Tesla absolutely had a pretty good week. And I was happy to see that. So, that's kind of the interesting thing, because people had been really concerned with tech. Everybody's worried about tech and, not showing a profit from all of the money they're sinking into AI. But Tesla sort of helped alleviate it a little bit, because when Tesla did really good, people are kind of like, oh, well, maybe there is hope. So we'll have to see. It's kind of one of these things. I'm kind of at a loss as to how I think these tech earnings are going to go. I think we'll have some that are good and some that are bad, but it really boils down to, like, I think Apple will be okay. I also think Meta's going to be fantastic. Google could go either way. Amazon, I think Amazon will be a little bit fine. Like, I think for the most part, I think these earnings are going to be okay. There might be a couple of misses, but I think for the most part, I think they'll be better than last time. But, all right. Do you think Enbridge will raise their dividend? I can tell you. I can actually tell you right now. Let me go back to Enbridge. All right. All right. All right. So here is our Enbridge. Let's go into their key data. All right. So you'll notice here with Enbridge, you'll notice 4 quarters. If we go back here, you'll see this as well. 4 quarters. 1, 2, 3, 4 quarters at 83.5. 4 quarters. They are a dividend aristocrat. So they have been raising their dividend for a lot of years together. So with that being said, you'll notice here the 915, we've had 1, 2, 3 quarters. So this means that their December, when they call it, their December dividend is going to still be at 91.5 or 91.5. But their March dividend, they should raise it for that one. That's what I'm anticipating with them. So March. In March, you should get a dividend increase over there for Enbridge. How much it'll be? Hard to say. I mean, look at, in most cases here, you'll see it's roughly, almost 3 cents here. So probably almost 3 cents again, I would imagine. All right. Let's see here. Where was I at? Oh, I missed Mario. Hey, Mario. Good to see you. Let's see. I'm selling the rest if my HYLD for other ETFs without leverage. Yeah, absolutely. I can understand that. So here's the thing, though. I mean, I think HYLD is going to be fine as long as the market stays in an upward trend. But when you, if you're holding HYLD and it looks like we're going to start to slip into like a bear market, you probably do want to get out for sure. And it doesn't, I mean, in this case here, Mario, getting out early, even if, I don't think we're going to, things are going to crash in November, but if you've got a bad feeling about it, it doesn't, I would rather you move out, put your stuff in things you feel more confident with. If it's going to help you sleep better, even if you're wrong, there's always going to be that one time that you're right. So, it's not a bad thing. It's not a bad thing. All right. Michael says, I like F in the auto sector, but having problems on their EV autos and where you lose money and like it the best since the government never helped them like they have with GM. Yeah, I mean, I do like Ford. I do like them. But yeah, the auto market I think is an interesting place right now. It's gonna be it boils down to how EV adoption is going to go and how much the government's going to. I know up here in Canada, there's some pretty stiff, what we're going to say, road posts for goals that we have to hit on the road to EV. But we are due to get a new government next. Probably. I wouldn't be surprised if it's a spring, fall at the latest next year. And that may very well change those road posts as well. And, you never know what's going to happen in the U.S. as well once you have your election. So just something to think about. But yeah, I do like Ford. Trick or treat. Do I have to answer? Both of them scare me. Both scare me. Stellantis. That's... There we go. I was thinking Chrysler in my head for some reason. I'm like, no. It's Stellantis. Let's see. There's been multiple owners over the years. Was Chrysler when I first started in 1994. All right. Let's go down here. Thank you, Candace. My partner is retiring as well. He is 59 and we work for the same employer. Oh, fun. All right. Will post after this have ended. Did the fast, lazy way to use AI to translate. I don't think that's the lazy way at all. Quite honestly, I get responses. Every so often I'll get a response in French on one of my videos. And I also had one of you guys, I think you were challenging me, responded to me in, I don't think it was Spanish, it was Portuguese. But hello, ChatGPT came to the rescue and I was able to have conversations in Portuguese as well as French. So I love it. I'm okay with that. Maybe someday someone's gonna trick me up. Somebody's gonna come in and post in Klingon or something. But I wonder if ChatGPT knows Klingon. That would be very interesting. All right, I'm gonna ask for comment in Klingon. I don't have it on the screen that you guys have, but let me see here. Give me a second here. All right. Let's see. How do you say? All right. Do your own research in Klingon. Well, this is really, really stupid, but it's okay. All right, I'll post this for you guys in case you're curious. Don't ask me to say it. Do not ask me to say it. Here we go. Apparently that is do your own research in Klingon. So there we go. I could talk to you guys in Klingon if you want to. Oh boy, that's actually really, really funny. Oh boy. All right. Let's just see here. All right. Boy, I'm really far behind. I'm like, how far behind am I? Because when I put that comment in, it puts me right at the end. All right. So let's see here. All right. We're going to jump over to here. Let's see. BTC up since Friday close. So Bitcoin ETFs and MSTR should be up on Monday. Yeah, absolutely. Let's see. STLA is drowning in inventory. Their vehicles are all way overpriced. CEO is European and doesn't understand the NA market. Very arrogant. He full steam ahead on EVs. Yeah. I wouldn't touch STLA stock with a 10-foot pole. So STLA, by the way, Stellantis, everyone, in case you forget. Let's see. Does STLA pay a dividend each quarter? And I saw shares run into the $30 range, and it doesn't. It look cheap, and at $13 should be a buy. STLA. All right. You guys keep talking about it. Let's pull up Stellantis. All right. Here we go. So 1364. Come on. Where is it? Right here. Right here. Huge dividend yield, 12.124%. It's an annual dividend, though. So it's once a year. But if we come back here, you can sort of see. Let's actually go back to 5 years. I'm going to go to 10 years. This stock movement's kind of very interesting. They tend to want to go up, and then they tend to crash. So I'd like to know why it's doing this. Like, I can understand in some cases here. Like right here, this is the pandemic. That's perfectly fine. But the funny thing is that the pandemic doesn't actually look out of place for this stock. That's a little concerning. Then, yeah, and here's the bear market. But then they crashed big time. After we moved into recovery, they absolutely, this year, they've been just plummeting down. So they might be, this looks like a low. Like, if you look at the pattern, you might be thinking, okay, this is going to go up this way again. Maybe, but keep in mind, just because stuff happens in the past in the market doesn't necessarily mean it's going to happen in the future. Is there a good chance we're going to see some movement up? Probably. But is it enough that you're willing to put money on it? That's a question that you always have to ask yourself. When we go into their key data, now they don't have anything in here. That's always concerning. That always annoys me, as you guys know. Let's give me a second. Let's back up. But it might be because it's a U.S. company. So that does sometimes happen with U.S. companies, that they don't put everything in there, which means I have to go to Yahoo. We'll try them over here. STLA. See if somebody has some data on Stellantis. I don't know. All right. Let's take a look here. I actually want to go to statistics because I am looking. Okay, yeah, they do have it over here. Okay, it's actually not that bad. Their debt to equity ratio, 39.19%. I was actually expecting it to be higher. Let's take a look here. One more thing. We'll come up over here. Let's see here, right here. The return on equity, 16.76. Return on assets, 5.30. So that's not bad. Looking at that, it is feasible that they could absolutely turn around. It's feasible. All right. Paul says, those Wealthsimple promotions, does it say how long you have to not be a customer for? That's a good question. That's a good question. I don't know. There was an FAQ here, so let's see here. If I withdraw, which will I be able to? Can I modify the storage? Can I change my choice? Can I household? Which account? Do I have to pay? Do I calculate? Whoops, I did not mean to click on that. Can I keep the reward if I withdraw money? Do transfer and deposits need to? What happens if I want? Do multiple transfers? Can I combine this offer? I've been a long-time client. Why is this offer on new transfers and deposits only? That's a good question. That's a good question here. How do I qualify? Let's just see here. Yeah, no, it doesn't really give me anything in here to say. Yeah. You'd have to probably reach out to them and ask them. I'm not seeing it in here. Now, I'm not going to read everything in here. Not while we're streaming. I was hoping that there'd be something there nice and quick. All right. Terry says, only got an iPhone, so Mac Air sounds... yeah, I mean, if you don't have a Mac Air, or any Macs outside of your iPhone, that's not a bad reward. Like, when I say I wouldn't own one, it's only because I do a lot of YouTube stuff and a lot of video processing, and that for me is not something I would want to do. That's kind of what I'm looking at here. Okay, let's see here. Lisa says, I'm glad to be getting out. Let's see. Hair Air GED it. Okay. All right. Skid says, would making price changes in line with your competitors be considered price fixing? It's more matching. So the way it works, like in that, there's, let's say, for example, you're at Superstore. If Sobeys decides to have a sale, so they decide to knock, we'll go to bananas. They decide to knock bananas down by 10%. Well, chances are, if, bananas are a big draw, you're going to drop your bananas down by 10%. And the best way to sort of illustrate this is the Great Banana War. So back in the day, in Nova Scotia, there was a banana war between all of the grocery stores. One of them lowered their banana prices, and the others all matched. And at the end, basically, it got so out of control that you could go into the grocery store and buy, a batch of bananas, or a bunch, or whatever you call, whatever you call it. You could buy it for a penny. They were like insanely cheap, and I remember this so clearly because we were inundated with bananas. My mom was a single mom at that time, and that's all she did. She just brought home bananas. There was banana bread everywhere, banana loaves. Anything with bananas in it was pretty much on the agenda and this thing went on for like about a month. I think it was roughly a month, maybe more, that the banana war went on, but it was just crazy. So that's not technically price fixing. Now, price fixing would be more or less if they got together and said, hey, look, bananas sell for, 50 cents a pound. Let's all knock it up to 75 cents a pound. Hi, Alexa. But that's price fixing. It normally goes in the upward direction. If you're cutting prices because your competitor cut a price, that's definitely not price fixing. But when you look at now, if you want to accuse anybody of price fixing, look at the big three cell phone providers. That's kind of, it's like borderline price fixing because, they all charge really high prices because they know if everybody's doing it, customers have no choice to pay. And that's kind of why cell phone service is really expensive in Canada. Now, you get breaks if you, in Quebec, the prices are cheaper. And I think Saskatchewan as well. It's either Saskatchewan or Manitoba. I believe it's, or it could be both, but I know in the prairies you can get some cheap prices as well. But the rest of the country, you're basically out of luck when it comes to prices. So Stellantis is being sued by their own shareholders. Oh, great. Ian says, Wealthsimple says I'm up 13% 1 year return. Am I beating the markets? Hope so, but I doubt it. That's a good question. I don't know. Depends on which markets you're looking at. I mean, most of the markets are all-time highs, but you can just go to Google very quickly, and we'll ask, TSX year to date. It should tell us. Give us something. What is the TSX performance? All right. 16.72% apparently. Now, I would still go back. Normally I would go in and actually pull the chart myself and calculate it myself, but we're just saying, just getting an eyeball. So 16%, and you said that you're up 13%. So you may not be beating the market. You may not be beating it. All right. Paul says the BTC and BTC ETFs had a 2% dip at 1:55 p.m. Friday, and 30 minutes later it recovered. Yeah. I mean, well, let's just give me a second here. Where am I at? Okay. There we go. I have so many windows open. Now this is CSTM. So let's go up here to, we'll just go to Bitcoin for a moment. And you can sort of see, I mean, this here is mostly Friday, but it had a strong finish on Friday as it's starting to move back up. Actually, this isn't even Friday. This is now Sunday. When something operates all the time, you're looking at it. My mind instantly goes, oh, look, here's Friday. But no, that's Sunday. Because Bitcoin, of course, operates all year round. But actually, if we go to, let's see here. We'll just go to BTCY. You can sort of see some of the dips. And you can see it sort of ended Friday on a down. So not the best. But this is going to go up big time. This is going to go up big time because Bitcoin, as you can see, Bitcoin has been climbing. So this is Saturday, and now this is Sunday. Now, mind you, I have noticed that sometimes this happens, and this is hilarious. Like, we're having a fantastic weekend on Bitcoin, and then what happens is Monday morning, an hour before the market opens, Bitcoin crashes, and I'm like, no, I can't take those profits. That happens more times than not, but hopefully this stays up. Because I'm still hoping before the end of the month, and the end of the month is Thursday, so I've been hoping to see a new all-time high before the end of the month. So I know a lot of people are sort of holding off. A lot of investors have been holding off for a while because they're sort of thinking that, they'll wait till after the election to figure out what's going on. And that might be the case. But I'm still I will lose a little bit of confidence. No lie, if we don't get an all-time high by Thursday. And I feel like I am going to lose that. But I'll give it a little bit of a stay of execution until after the election and see what happens to it at that point. All right. Let's see. Pick the index and check, Ian. There was those of you who don't read the chat, that there is do your own research in Klingon. I said I wouldn't say it, but I'll try to. Let's see. Yatajak Dak. I don't know. Anyway, that's my thing. Oh my God. Oh, Paul. All right, I'm not going to read any more Klingon. No more Klingon, guys. See, Ian on the year up 16.8%, but from September to 7th up 37%. Stellantis is a European company, not country. Ian says I should buy more ETFs. Is that how I can match market returns? ETFs, like I said, I do like ETFs. When you do get a broad-based ETF, so something like VFV, you're going to pretty much come in pretty close to the market. So that does certainly help. And I also like as well, if you get some really good steady stocks, like for example, if you had like a core in your portfolio, and let's say you wanted to go with ETFs, so maybe VFV and a few others, that could actually work out really well. Maybe even throw in like a like an XEQT or something like that in there as well. But yeah, it really boils down to the other thing too is sometimes there are things happening in the market that if you don't react to them, if you don't, let's just say, if you don't get out, sometimes if you've got a loser that's just dragging you down. And I am going to post, by the way, the 0 to 100K challenge update pretty soon. I'll probably post it on Thursday. I will tell you, I did get rid of, DE is gone. And I also got rid of DRX. I was just like, no, it's still pulling me down, and I just want that money over onto real estate right now. That was my big reason. Normally, I probably would have given them more time, but honestly, with the rate cut season, it was more feasible just to move those funds into real estate. So that has changed as well. So I will do a write-up because as you know, we're doing a quarterly video now. So I will be publishing a write-up on the community channel. I'll probably throw it as well into the Discord and the Facebook groups. All right. Paul says, more sure thing is BTC MSTR, so a MicroStrategy. Worst case, you just have to wait. Yeah, with Tesla always does come back at some point. All right, so let's see. On those Wealthsimple offers, you have to stay a year or they will ding you the cost of the promotion on exit less than a year. Yeah, there we go. All right, I'm just going to skip stuff. Anything right now that's not addressed to the chat, I'm going to skip. So all side conversations. Ian says, guess I can't kick myself too hard. My non-registered account is up 33%. Ooh, nice, on the 1 year. My other accounts have not been with Wealthsimple for the full year. Banana bread wars. I love it. I love it. 9 says, I'm thinking of trimming leverage ETF soon in case of a crash black swan event. And I do know that 9 has been preparing just in case. Preparing. King of Day says, is that where the saying banana bread came from? No, it actually isn't. The origin of the banana bread saying and the holy banana bread. When I first started working in, actually, I think it was Compaq. I was working in a call center then. When I first initially started there, you're not allowed to swear, of course, because you're talking to customers. And I mean, I don't normally swear that much anyway, but I thought, well, I need to have a swear word that I can use. And I was kind of thinking like of Batman and Robin, how Robin's always going, holy bat something or holy bat something. And I'm like, well, why don't I just have a holy banana bread? And that's just kind of where it came from, and it stuck, and it became a part of the lexicon. I used it a couple of times on in the initial videos, and people liked it and responded to it. And I'm like, oh, okay, yeah, that'll just be a thing that we stick around with. So yeah, that's where it came from. All right. Let's see. Paul said, I had 3 phones on Kudu, $35 a month, 65 gigs, and they raised prices $5 a month. Had to contact them and change to a $40 a month gigabyte and then a $5 a month discount for autoplay to get back to 35. Holy cow. Yeah, it's crazy. It's kind of like, I don't know. It's one of those things where I kind of wish we had some of those. We had that competition level they have in the US where you can actually get, like most Americans, when they look at what Canadians pay for their cell phones, they're shocked. They're absolutely shocked because it's crazy up here. Ian says, I got 2 phones on a family plan, $150 for the pair, so $75 each. I'm in Saskatchewan. Is that cheap? Probably. I mean, it depends. Yeah, especially if you want data. At one point here, it was the longest time you couldn't get unlimited data. And even now, your unlimited data plan, it'll toggle you after you hit a certain amount so that you're getting, you're pretty much at a speed that the best you can do is maybe read an email. But that's because they want you to get to higher data plans still. So it's kind of almost an illusion, the unlimited data, just to sort of put it that way. But it is better than the way it used to be. Like if you're on the unlimited data, at least they're only toggling you, because in the olden days, and this is not that long ago, we're talking maybe 5 years ago, all of a sudden, if you were you went over your data by a minute, like or a gig or half a gig or even 10 millibytes or something, or megabytes, sorry. Um, you were dinged for it big time. Like I know at one point it was like it used to be $15, then $40, and I think at one point it even made it as high as like $75 each gig that you were over. And you went over 10 megabytes, they charge you for a whole gig. It was crazy. Now what I used to do, because I did work briefly at Rogers, is anybody who called up, I basically would I would say, look, let me put you on this slightly bigger plan. It'll pay for you this month. It's cheaper than paying the overage, but be sure to call back as soon as the month's over to get yourself switched back. My bosses didn't like me saying that, but I was, I'm not going to take advantage of people that way. I just won't. John Locke is in the house. Hello, John. Been a while. I'm glad to see you, John. It's been a while. Absolutely. Andrew says, I bought CLS a short time ago. Should I hold with a stop or sell? CLS, let's head over there. I need to start closing some of these windows so that I can find stuff. All right, CLS. So Celestica. All right. So let's see. You bought it a short time ago. Should I hold with a stop or a sell? Oh, look at that. That's a nice little movement right there. All right. Oh, very interesting. Huh. Here's what I would do. You've got this momentum going up. I don't know if it's going to retrace. It might. I would probably put in a stop loss. Because then if it retraces, you're still in profit, right? But if it continues for a bit more, you can always move that stop loss up as it moves. So that way there, you're still going to get a good thing. Because if you put in a sell limit, right, and it doesn't go up and it retraces, then you get no profits. At least if you put in the stop loss, you're going to get profits. So I would go with the stop loss, personally. Ian says, that Hawk 2 Hawk. Oh, boy. Oh, yes, absolutely. Oh, the Klingon. Why did I bring Klingon into this? Paul says, when are you adding MSTR or TSLA to the 0 to 100K? That's a good question. I honestly don't know, but I do want to. Definitely want to bring MicroStrategy. I think would be a good one. But right now I haven't yet. Maybe next month. I'm not sure though. Don't hold me to it, but maybe. Andrew says, I'm up almost 50% in a few weeks. Oh boy. Yeah, that's crazy. That's crazy. So yeah, get that stop loss in. That way there you're going to take some profits, right? A Gray Swan event. I love it. Really liked your video on QQQY. Thank you for that video. Oh, you're welcome. Yeah, it was a good one. I was happy that we got that one, for sure. Skiz says banana bread origin story. Worth. Yeah. Let's see. Yeah, phone service companies rob us in Canada. Yeah, absolutely. Yeah, it's terrible. Let's see. Ian says, where I work, if I said holy banana bread instead of a proper curse word, I would probably have to go for a drug test. That could be. Let's see. 9, Freedom Throttle isn't terrible. Can still watch HD YouTube at least where I live. Oh, that's not too bad. That's not too bad at all. Now, mind you, Freedom is owned by Quebecor, so they're probably nicer than the big three. All right. Oops, I'm supposed to be skipping those ones. All right. Oh my God, I finally caught up. Paul says Robinhood trading starts at 8 p.m. On Sunday. Indicator how Monday will go. Robinhood is USA. Just make shortcuts on my phone to see what happens during the earnings calls. Yeah, absolutely. And there's the other thing too. And anytime I've done a market open, I've only done 2 of them, but those have been fantastic because you've had that opportunity to get in there and really look at what's been happening. worldwide. You can sort of look at the Asian markets, the European markets. You can see it all, and that gives you a whole really good thing. Let's see here. Is the stop loss option available on Wealth Simple? Yeah, I believe so. I think it is. Anybody correct me if I'm wrong. I think it is. I know that there are limit buys. I there's going to be a stop loss. Give me a second. I'm going to just take a gander. I don't know if it'll show me in the after hours, but I'm pretty sure it's there. I do all my trading on National Bank, but all right, give me a second here. I'm just going to get into any asset here. Let's see here. We'll go into here. All right, I'm going to go here. All right, I'm going to pretend I'm going to sell here. Sell. Yeah. Okay, let's see here. I got market limit, stop limit. Yeah, so they call it a stop limit on Wealthsimple, but it is there. So it's called a stop limit there instead of a stop loss. So just where up at top where it says market, there's a little arrow. You just click on that, and it will take you down, and you can go to the stop limit there. So there we go. Okay, guys, we're pretty darn close to the end here. If you got a burning last minute question, get it in there. Get it in there. And while we do that, I am going to, let's see here. I'm going to drop myself here up to full screen. Holy banana bread. We don't normally get to use that on these streams, or at least on this one. Oh, very good. Although my coffee is getting a little cool. I didn't drink as much as I normally do. Now, guys, any of you who have not yet hit that like button, be sure to nail on it. Let's get that like button going. It does help the algorithm, even on the way out. Even as we're finishing up, it's still good. I do want to point out, we have the Members' Choice video that is coming out on Tuesday. That one's a good one. They want me to do Canada Pension Plan. So basically, and not so much about when normally when I do a CPP video, I explain how it works and about the deduction, all of that stuff. We're not doing that in this video. We touch on it a tiny bit, but this one's just about what the heck does the Canada Pension Plan hold? How do they invest? What are they investing in? All of that stuff. So that's what's going to drop on Tuesday. Those of you who are channel members, you'll get to see it a day early. So that will be available for you tomorrow. I've actually finished editing it. I just finished that before we started. So that's going to be kind of cool. We will be back here for a market close on Wednesday. And, that's going to be the last one of the month. This month, by the way, I did tell you guys at the beginning of the month that I really wanted to put a push on this month to get out some really good content and try to break some of the channel records. I am pleased to say we're very, very close to breaking almost every record. So this month, by the end of today, we'll have the record for the most views in a month. We'll have the records for the most hours watched in a month. We'll have we're getting close to the most subscribers in a month. So everything is looking really good that way. This has been a fantastic month. Now, of course, we're not going to let that momentum go down. We're going to push it all the way to the end of the year because December is going to be a massive month. Can't wait at all. All right, so let's see here. All right, Missy saying, have a great Sunday. Paul is saying, Sol up 3.75% last 24 hours. Nice. Solano. Why is Mark Carney trying to get a hold of CPP investments? I don't cover that. We're just basically looking at how it works, what they're investing in, all of that fun stuff. So I don't expose any of the crooks that may be in the Canada Pension Plan, but it wasn't that deep hitting. It's more or less just looking at how it works, to be honest. Let's see. Oh, that sounds good. Missy is very much enjoying Skiz's humor. Skiz is funny. I like Skiz. Skiz is pretty darn awesome. All right, guys. I think we're about at the end. We've been here for um yeah, we've almost been 3 hours. Holy cow. We normally only go about 2 hours. I know right now I'm getting a warning. I got about 10% battery remaining. Now mind you, I could plug this baby over here into it. This is my solar panel, my solar powered charger thingy. It gives me some extra juice, but I think we're at the end for today. Guys, I will be back here again Wednesday. Can't wait. It's gonna be a great week. Hopefully you all have good weeks on the market. Until then, everyone, have a fantastic day, and we'll see you again very soon. Bye, everybody.